Double vote. Take. CEO over at Campari Group after the last CEO was only there for a few months, Guy.
Absolutely. Simon Hunt, I think, is his name. Let's talk about this market.
I will show you how to get the best funding for
your... quite one to start with when it comes to equities. We're not expecting much action. We're not expecting a great deal of volatility, but there's a lot to wait for throughout the day. Lagarde speaking, Powell speaking. Oh, yeah, there's a couple of French votes that you may need to focus on as well. So things are definitely in play today. But at the moment, as Anna says, we're sitting on our hands. We're waiting for maybe some more clarity in terms of the developments that we need to focus on. The FTSE 100 futures actually indicated a negative open, and that's what we're now beginning to get. As you can see, we're just drifting a little bit lower. 0.1% to the downside. The 600's up by 1/10. The CAC Quarante is open. It's up by 0.1%. We are waiting and we are watching. The Madrid market is up by 0.2%. We'll wait for the Germans. We'll wait for the Swiss. We'll deal with that in just a moment. But at the moment, a cautious start to the European equity session, Anna.
Yeah, absolutely. A cautious start. And we do see more sectors in positive territory than in negative, but it's not by much. But we do have that slight balance to the upside. Retail is the best performing sector there. I noticed technology not doing too badly as well, up by 0.4%. We got confirmation from ASM International this morning that they were kind of as you were with regards to some of the latest moves from the US Biden administration against China with regards to chip access. And so that follows hot on the heels of some reassuring words from ASML just yesterday. And so the technology space may be moving a little bit higher on that in the very short term. Autos and parts is the best performing sector now. Stellantis bouncing up by 2.5%. In fact, it's been a torrid time for that business, of course, having seen the departure of their CEO. So we watch that one go a little bit higher. By far and away, the best performer in that sector, up by 2.6%. Healthcare is where we see some of the downside, and that sort of fits with a slightly more risk-on picture that we're seeing today, at least in this window of calm that we see then in markets between not really knowing what happens in Paris and then knowing what happens in Paris, which comes later on today and certainly into tomorrow's session.
It just doesn't seem to be an obvious political story. We started the show talking about politics and the chaos and the kind of the headline trading that we've seen over the last kind of day or two. Feels like the France is kind of in focus, but the focus maybe is further ahead of where we are right now. It's really interesting. Campari is up. That's on the story we were mentioning a little bit earlier. Stellantis bouncing back. These are single stock narratives that maybe are moving the market. You are seeing AP Møller-Mærsk down. I think there's a downgrade in that space this morning as well. That stock's down by 2% on the back of that. Aegis is in focus. I think that may be an XD. So there's a few kind of single stock names, but I can't discern a clear trend.
Yeah.
Or obvious kind of sense of direction from these European markets.
Yeah, the sense of direction is a holding pattern, isn't it? Sort of, as you say, sitting on our hands, standing still, waiting for more clarity, certainly out of the French situation. Have we reached the end of the story in South Korea, or is there more to discover on that front? Let's talk to Nanette Heschler-Derb, CIO for EMEA at Lombard Odier, who can weigh in on European stocks this morning and the broader macro picture for us. Nanette, good morning to you. Let me ask you about what's happening in Paris and the extent to which it's affecting asset allocation for you. So what are your thoughts? What's your thought process around French assets, given the way things are unfolding in the French capital?
To start with, I think we have to acknowledge the hung parliament, which was going in the first place to make any government formation quite difficult in France, and hence this political vacuum to be one that could be recurrent. And in some sense, I'm thinking about it as a stable vacuum because of exactly the parliamentary context. Stable, why? Because in such a constellation, it is very difficult for a government to take any specific economic policy that is perhaps more marked, and that is in some sense the guarantee for stability. Therefore, I'm not too surprised that the market is relatively phlegmatic at this point. After all, there are a couple of very important points to make here in terms of the French situation. This is not a crisis of the style we had, for example, during 2012 and 13 with the European debt crisis. France has a current account deficit that is tiny when you think about it, which means that it has the ability to recycle and fund the government debt internally. That is a strength on which markets can take solace with and build on. And also French companies on the equity sector in the various sectors are actually companies that have exposure to the global economy more than only to the domestic economy and domestic policy.
That's all great, but if you're a US investor, why on earth would you invest in France right now? Why would you invest in Europe? That's what we need to see happen in order to turn these European markets around.
And this is why, at the moment, we, for example, at Lombard Odier, we are underweight European equities altogether. French equities not particularly within that context. In fact, the underperformance so far and the valuations might suggest over time that there is a catch-up that this market could have. But European equities, European companies, and the European economy more largely is having headwinds and challenges that is quite ill-equipped at the moment to address other than with central bank and monetary policy. That with the US, where we have now a policy that is likely to pursue deregulation, to take measures that are supportive for the US exceptionalism, and you end up, in spite of high valuations, to certainly prefer that market in terms of the outlook for earnings.
Okay, so the US has, all of that exceptionalism, much talked about on this program, Nanette. I understand from your notes that, yes, you like US stocks. You have some interest in Japanese, Taiwanese stocks, also Korean stocks. I wonder if you can talk us through your thinking, what you, as an investor in Korea or somebody who's interested in Korean stocks, there's a lot of tech obviously being exported from that economy. How do you view, from an international investor perspective, what we've seen there in the last 24 hours?
Let me take just a step back to make the point that Japan, Taiwan, South Korea are certainly among the markets that we see benefiting from an upcycle. And we are constructive on the global economy for next year. Central banks are engaged on a rate-cutting path, and the US is likely to pursue stimulative policies altogether. So we think about the general environment supportive for cyclical markets and cyclical stocks. And now to South Korea specifically, we had some surprise with respect to these most recent developments, probably as most market participants would have had. But the very precipitated reactions afterwards are probably going to rapidly refocus investors on the fundamentals behind the market. So at this moment, I think that keeping a steady hand is certainly what has guided us through these very unusual events of the last 24 hours for sure.
So is this a buying opportunity in Korea?
Well, we have had a positive stance with respect to South Korea. At the moment, we are minded to keep that.
Nanette, thank you very much indeed. We'll leave it there. Nanette Heschler-Fayed, CIO EMEA at Lombard Odier. this is the question. You look at these valuations. You look at what's just happened in Korea. The stock market gets dinged up. Is that an opportunity to get in? You look at Europe, super cheap valuations. You look at what is happening in France. You look at the political instability that we have in France, in Germany, providing maybe opportunities to get into these markets at very reasonable valuations. But nobody's interested.
Right, yes.
Because the US shining hill is over there, and that's where you want to go.
Yes, we're almost bored of saying that yesterday we got a new record on US stocks. I mean, it just happened so many times during this year that it doesn't seem to be remarkable enough to mention. Korean stocks down by 1.4%. And one thing that does unite many of these stories, and not directly, because they're clearly very idiosyncratic and very domestic in nature in many ways, but the new President Trump, the arrival of another Trump presidency and the tariff implications of that is going to have an impact on all of these global assets. And thinking about that as we head into the new year, and what we don't know around his intentions is going to be really important. This is a picture of French assets right now. French stocks up a little this morning, up by 0.3%.
Absolutely. Ignore the percentage at the bottom there on the spread, because that's not in any way relevant. But the spread between Germany and France is relevant. What we really need to know about is what is happening within France, particularly within the business community. Chris in Paris, and she's joined by the perfect guest to answer that question.
L'arrière.
Guy, Anna, it's fascinating to be here. I feel like I'm learning so much about kind of the dynamics that are really evolving here. It feels like such a historic moment in France, and yet when we're talking about the ripple effects, that might take a little bit longer to actually get to in terms of actually seeing this show up in the economy, seeing this show up in companies, and of course, perhaps something that the markets have been talking about for 6 months or so. I've got the perfect guest to talk about it here, Fabrice Lesachet, I'm going to get that right, the Vice President of MEDEF, basically France's largest trade group, joins me right here in Paris, outside, by the way, the National Assembly.
Hello, good morning.
So much. Good morning.
Welcome in Paris.
Thank you. You're very cheery for what feels like a little bit of a gloomy day in French politics. We're talking about this historic moment in a no-confidence vote in Michel Barnier, a budget that may not get passed through. How does it show up in the businesses you represent?
The issue for us is stability, because you know that the cost of refinancing the debt for France is huge. It's 50 billion per year. And the projection, if nothing is done to tackle the issues, will be 60, 70 billion. And we should use this money to do something else. And the problem is that if we don't have a government, we go back to the budget of 2023, and we don't have the choices that are needed to cut the spending, because this is what we need to do. We have 57% of public spending on GDP.
Yeah.
Netherlands, Spain, Portugal, UK have dropped down the public spending. We should do the same. And the biggest issue is pension, and we should tackle that as well.
So you represent some of the biggest corporations in France, companies that are multinational by design. What we're seeing in other parts of Europe in terms of competitiveness, in terms of dealing with some of the volatility in the fiscal side, of course, out of the United States and China as well, has been the story of almost incentives, of subsidies, of spending in a big way to incentivize growth domestically. France can't do that because of the fiscal handcuffs you just mentioned. What can they do to support their businesses locally?
The problem of France are not only France, it's European problem. We have a collapse of the industry. You see that in Germany. You have seen in the news. In France, Airbus, Valeo, Michelin have announced some plan to cut jobs. But in Germany, you have Bosch, ThyssenKrupp, Volkswagen. The problem is cost of energy. It's slowdown in China with overcapacity that come to Europe, and it's trade war that do the protectionism, and we have more tariffs. And you know that Europe is the region that is the most dependent on exportations. And the model of Europe with cheap energy exports come a little bit to an end. And we have on top of this the Green Deal that we did since the last 5 years with no vision of competitiveness, of growth, of business. And we need to bring that back in Europe. So there is a new commission now. So MEDEF is fighting at the Brussels to have simplification. You see Millet and Musk is a wake-up call for Europe because you have seen all the plan for deregulation there. We don't want to do the same, but it's a wake-up call that the complexity of doing business in Europe is a problem. And we see that the industrial production of Europe dropped down since 2000 compared to China by twice. China go up twice, 2 times more, and Europe twice down.
The fact that it takes Javier Milei out of Argentina and Elon Musk out of the United States for Europe to wake up is quite the take. Let's talk a little about some of the politics a little bit close to home. Outside of France, you mentioned Brussels. We could have days about the issues there. I want to talk about Germany. You mentioned a lot of German companies. Does the fallout and the politics and the debt brake suspension in Germany have a bigger effect on French business than the collapse of the French government?
Germany is a powerhouse for Europe. Czech Republic, north of Italy, France are depending heavily. Germany is our first trade partners. These Eastern, Central European countries are in the value chain, in the supply chain of Germany. So when Germany is slowing down, it's Europe that slows down. It's not good news for Europe. We need a strong Germany. We need strong UK, by the way. It's not inside Europe, but we need strong UK. We trade a lot with UK. Yeah. We need a strong France. And we need to fix the problem in Brussels, because in the last years we had some choices, monotech, obsession by ideology. For example, in automotive, only EVs. It's only Europe that do this. In China, they do EVs, they do thermal engines, they do hybrid, they do hydrogen. In US, if you take the energy, they do shale gas, they do oil, twice more than Saudi Arabia they produce. They do renewable energy. And now they invest in nuclear energy with Microsoft, Amazon, Meta, and American banks. So they do all. They don't have an obsession for monotech. Europe should give more breathing space for innovation. Let the company do their job. And less reporting obligation. We have CSRD, CS3, non-stop. So let the company focus on products, services, commercial development.
Let's talk a little bit about the development in terms of French companies that want to grow. So much of a big piece of that is refinancing conditions. That's where France is getting into some tough spot. I believe we're looking at 84, 85 basis points right now, and the spread between French debt to German debt. Does that make it trickier for French companies to grow, and how?
Yeah, it's complex, of course, when you have a high interest, but not only for companies, for households. We have a big real estate crisis. Construction sector is very much down in France because of the high interest rate that we got for a long time. And so it touched the households as well. Companies for sure. That's why at MEDEF we called the ECB, that is independent, but we called the ECB to ease the interest rate. And I think that some movements are expected at the European Central Bank to have some interest rate a little bit cut, because of course it will boost the ability of company to invest. Because now we need to invest. We need to invest not with public money, with private sector money. And for this investment we need two things. One, capital market union inside Europe, because titrization is not existing. US capital markets is huge with many tools. We don't have that in Europe. We need that because every year Europe sends to US 300 billion euros. That's one. And second thing, we need profitable projects and business. Otherwise, how we will invest in Europe? And for that, we need a framework that works for companies and businesses.
So in the absence of that, final question to you, how do the companies you represent and that you're talking to prepare for what sounds like really tough refinancing future, a government that may not have the leadership after this new confidence vote for a couple of months here, the threat of Germany, the threat of China, and the threat of the United States? What are French companies doing to prepare?
Our companies are global. They work everywhere, and they have a structuration of financing.
That's the risk factor, Fabrice, no?
Our companies work everywhere. They have refinancing and financing opportunities in different regions. They are very global, more than other countries. The CAC 40 works everywhere in the world. So the opportunities to finance themselves where they operate is a regional issues. They don't finance all their operation in the world from France. The problem is for the state more than the company. And what you mentioned, the spread with Germany, the rate at 10 years, curve yield with Greece, etc., can go down again very fast because the markets are volatile. If the right signals are sent, if we have stability, if we have a government that shows that we will tackle this pension issue, that we will tackle this fat state to make it more lean and to have reforms, then this will go down very, very smoothly and fast. We have seen countries that did it, so France can do it as well.
All right, a very optimistic approach from the representative.
We are in business, we are entrepreneurs.
You might be alone on that island. Fabrice Lesséché, we'll keep the conversation there. We thank you so much joining me here this morning in Paris. Guyana, he seems very optimistic, and I've got to say he's not the only one. I've spoken to some of the folks here. They're saying this is something that so many people have prepared for, and that even if we do get this collapse of French government, it may not create the ripple effects that we thought it did, say, 30 days ago.
Nevertheless, that's quite a shopping list. I was just writing down, Critty, some of the things that he was talking about that was on his shopping list for recess. Political stability, that sounds great. That looks like it's going to be a tough ask right now. Lower interest rates, we may get them, but not that quickly, coming through from the ECB. A smaller state in France, less bureaucracy. Bureaucracy is a French word, isn't it? Isn't that maybe at the root of all of this as well, that we have this huge state in France? It's quite a shopping list. Are the people you're talking to suggesting that any of the things that are on that shopping list are available for selection right now?
It doesn't sound like it. I think that's the irony of this conversation. It all sounds great, and he does make a crucial point in that spread can actually compress very quickly. We do talk about it in the context of Spain and Greece. We also have to keep in mind that the trajectory of Greece, the trajectory of Spain has been in a downward trajectory as well in terms of the yield premium. France is just meeting it on kind of the uphill battle. That being said, the political stability question is a crucial one because you could actually see the French government unite in the face of not necessarily the domestic politics, but what happens in the United States and what happens in China. To me, I think the highlight of that conversation, Guy, was that the ripple effect of Germany may actually be a bigger deal.
Critty, thank you very much. Critty Gupta, of course, in Paris, keeping us across that developing story. Another developing story. Opposition lawmakers in South Korea are calling for President Yoon to be impeached after he plunged the nation into a political crisis by briefly imposing martial law. Joining us now, Bloomberg Insight anchor Haslinda Arman with a guest. Haslinda.
Well, Anna, we know that the Bank of Korea has been trying to allay concerns, wanting to bring calm to the market. And so far, we've seen some reversal in the losses of the won. Let's get perspective from the BOK governor. We have Governor Ri Chang-yong joining us from Seoul. Governor Ri, good to have you with us. I'm just wondering how you're assessing the fallout in the market so far.
The martial law declared last night has been lifted within a few hours, and the financial markets are stabilizing quickly. It's a relief that the impact of the market was short-lived, while it is still true that it's hard to predict the political dynamics. But I believe that the economic dynamics in Korea can be separated from the political dynamics, given our strong market fundamentals and also the matured democracy.
So do you think you've done enough so far?
No, what is enough is actually I'm very happy that the impact has been short-lived. Definitely we have to see how these political events will evolve. In the meantime, we focus on providing ample liquidity to stabilize the market. And when we look at the market, we do not see any malfunctioning. So, but on the other hand, we, by expecting that, in preparation for the future possible financial unrest, we actually strengthened our liquidity injection facilities, such as increasing our repo purchase agreement and also extending our eligible securities for open market operation. And so far it's okay. So far it works well. Yeah.
So far, so good. But in my conversation with a former trade minister of Korea, he did talk about how he's expecting prolonged political uncertainties. How prepared is the BOK for that?
Actually, I watched your program. Actually, I think he was more concerned on the other structural factors, not only this prolonged the political issue, but I think it's not yet decided. It's very hard to predict which options the political process will evolve. But I think that the Korean government officials are well trained. We are well experienced in handling the several difficulties. So I think while in government in transition or in this transition period, which we believe a couple of months, I think we have many tools and talented government officers to handle this macroeconomic situation.
Might the tools include another rate cut? You did a back-to-back rate cut in anticipation of Trump's tariffs, which you say will weigh on the economy. Might we see you cut rates even more?
Oh, you mean that because of this political turmoil? I don't think so, because as I mentioned, this this political event was very short-lived, and I do not see any reason why it has to change our economic outlook at this moment. We are focusing our growth rate this year will be around 2.2%, and the next year it will be around 1.9%. But I think we are still, at this moment, stick to our forecast. But I believe that our growth focus will be more impacted by the structural factors such as change in global value chain and also the facility rate and demography in our country. So these structural factors will be a much more important factors in determining what will be our monetary policy will be and how we'll change our forecast rather than this political event which is short-lived yesterday.
Governor, we know that you have regular meetings with the finance ministry, also with the financial regulator. That meeting now becomes even more important given how the government is now in disarray. I'm just wondering, what's the significance of those meetings now, and what kind of issues do you think will come forward?
I can be very proud that we call F4 meeting, financial experts meeting. I think that this is actually, I have been working for many other institutions in many other countries, but I think the communication channel that we developed the last 2 years through this, among our 4 regulators and finance ministers and me, we discuss every issue. And we actually honor our independence, but we discuss finance stability, monetary, fiscal, every issue, we exchange our views. And actually yesterday, after this political event happens, around 1:30 a.m., 11:40 a.m., we gathered together, discuss what we can do together. And then we also had another meeting at 7 in the morning. Actually, today I was tough day for me. I'm already sleepy, but I think this cooperation mechanism is work very well, covering almost every economic issues.
Governor Rhee, I'm just wondering, with regards to the meetings that you have with the policymakers in the finance ministry, for instance, I mean, should the framework be tweaked perhaps to improve the leadership and the effectiveness of those meetings, given the situation of the government right now?
I think I like this this informal platform, because it becomes formal, you need to prepare, and there are a lot of bureaucracy can be involved. But given our intimacy, and we can discuss many issues, and by honoring our independence and the separate role of each institution has to do, we can do the perfect division of labor. For example, today, Bank of Korea called on the Special Monetary Policy Committee meeting. We focused on the liquidity injection today, and the Financial Regulatory Services focused on the measures how to stabilize stock market. And then Minister of Finance is coordinating many policies, and they actually work hard to develop and monitor the FX market. For example, this kind of division of labor has been possible because we have discussed this policy consistently, coherently across our institutions.
You talked about how there is no need to relook at your rate cut trajectory. How confident are you about the economy, bearing in mind that we're seeing protests in the streets? I mean, tomorrow we're going to see the Korean railway workers going to the streets as well in protest. Might that not impact investor sentiment? Might not that impact consumption? Might not that impact confidence in the country and the economy?
Probably the factors you mentioned could have been a very important factor if the president didn't accept the National Assembly's recommendation to lift the martial law. But given that the martial law has been lifted, and now I think if you look at the other side of the coin, I think political certainty is actually increased, not decreased, because in the last couple of years, I think the tension between the ruling party and opposition party make everything in a deadlock. But now I think some kind of political certainty can also help our projections. Yes, as you mentioned, there may be some short-term difficulties, but I think if you can look at the other side of the coin, there is also a positive side. And I think if you look at what happened yesterday, actually I think that you can see that Korean citizens and our politicians and our political systems are much more mature and safe. And I believe you mentioned the labor unions protest, but that kind of protest has been around for last 10 years. And if President didn't lift the martial law, that protest could have been aggravated quite significantly. But I don't think that, yes, I think regarding this impeachment effort now, there will be some noise. But I think that noise is not as
right.
will not be very large compared with what we have been experiencing so far.
Governor Rhee, you're expressing optimism despite the political turmoil. What then? What scenarios then would worry you?
Look, I do not mean that everything will be smooth. I think the last couple of months, there will be a lot of tensions among the political parties, and this political debate won't be as smooth as probably we wished for. But what I mean is that, but those kind of things are within the realm of what our government officers and experienced government officers and professionals can handle using various tools that we have. And on the other hand, what I'm worrying about is that it's more like there are a lot of global uncertainties, as you mentioned, that the major countries, policy issues, tariff, and also changing of global supply chain. And as you mentioned, that the geopolitics in Europe is also quite uncertain. And what I'm worrying about is if our own problem is, in some sense, amplify the global uncertainty, then maybe we may have a little bit, more difficulties than I'm currently expecting. But I think what we are doing is we have to adapt what has happened. So at this moment, whatever happened in politics, whatever happened in political projections, I think the government officials like us and central bankers in Korea are ready to react to it.
Investors we talk to say we should brace for volatility, especially in the Korean won. We've seen it move, as low as 1.5%. It's recovered somewhat. Is there a red line in the sand for the Korean won? I mean, at what stage will you be defending that currency?
As in, Korea has been on the flexible exchange regime for a long time. And, we are not targeting for specific level of the exchange rate. But on the other hand, because Korean won is not internationalized, we are concerned on the volatility of our exchange rate and the pace of the exchange rate movement. So definitely using the integrated policy framework, we are trying to stabilize the abrupt movement of exchange rate. But at this moment, I think if you just look at what happened yesterday, for example, as I mentioned, the Korean won depreciated quite sharply, about 3% immediately. But now I think we are slightly above the level that we had before this political event happened. So I think in some sense, using various tools, including our liquidity injection, in the FX market too, I think we are now managing the situation better than you or some other people may have a concern. My basic point is that if you look at what happened in our political arena, this tension happened because of this event has happened because of political tensions, not any problem in economic fundamentals. So in that sense, I think that the impact will be short-lived, and we can focus on the economic strengths and the weakness of Korean economy rather than political side effect.
Governor, for investors looking for some kind of clarity on the situation in Korea, what can they expect in the next 24, 48 hours? From where you're seated, what can be expected?
I can ask what has changed. Actually, I think during the night, there was 6 hours, uncertainty increased significantly. Now we're back to it. So as you mentioned, this may cause a more internal fight among the politicians. And you can see those kind of fight. I wouldn't mention country's name, but you can see many other countries have similar political fight at this moment. And then, this kind of fight is not affecting our fundamentals. It doesn't change our stock market operation. And actually, if you look at today, our financial market functions very well. The risk is there, but I think I'm not downplaying the risk. There is a risk, but like in other countries. But that risk is, given the nature of the risk, is within the a range of what you can manage.
Governor, thank you so much for your time. Governor Yi Chang-yong joining us live from Seoul. Anna, Guy, handing it back to you.
Haslinda, thank you very much. Bloomberg's Insight anchor, Haslinda Amin, joining us there with that really important conversation today, Guy. And really interesting to get the Bank of Korea governor's views here, talking about this situation stabilizing very quickly. Of course, there are risks. We have to wait and see. But even suggesting that this is not going to increase the pace of rate cuts because this has been resolved, in his view, pretty quickly.
It lasted 2 hours, 48 minutes. It was fairly quick in terms of the imposition of martial law. Looks like the situation is stabilizing. There is a live shot coming from in front of the National Assembly in South Korea. You can see that there. Clearly, there are protesters demonstrating in front of the parliament right now. But it does feel as if the situation has resolved itself in a relatively straightforward fashion. You've got to remember as well that the Bank of Korea did deliver a 50 basis point cut, which caught many people by surprise. In some ways, it had already front-run this very prescient of the central bank.
Yes, and I know there were some in the markets who were suggesting that maybe these developments might lead the Bank of Korea to consider doing more of that to shore up the economy as we head for the uncertainty of another Trump presidency and what he might want to do in terms of tariffs, because this is such an open economy. And it is an economy that has very recent memories, just back to the late 80s, of martial law, of not being a democracy. And so all of that was triggered a little bit, I think, yesterday, talking to people on the ground.
Absolutely. Let's talk about what is triggering European markets this morning in terms of what we're seeing on our screens in front of us. We are waiting, of course, for what is happening in France to play out. We're waiting for Christine Lagarde to speak a little bit later on today and for Jay Powell to speak as well. At the moment, you're not seeing really that much activity in terms of the yield story, a little bit of a tick higher. So bond markets are selling off just a touch at the moment, but nothing violent in European markets this morning when it comes to the sovereign story. In terms of the equity markets, again, a lot of hands being sat on, I suspect, today as we await further developments. As you can see, we're a little bit higher across the board today. You are seeing a little bit of a bounce back in the French market, which is interesting. Maybe some unwinding of some of the concern that we've seen in that market as well. We're also getting some details emerging about what the European economy is doing. We're getting some PMI data. Some of this is obviously secondary data, i.e. the second read from some of the core countries. But Spain's numbers this morning are out as well. Spain services PMI out at 53.1. That's down from 54.9. So a little bit of a softening in the data there, pretty much in line with expectations. In terms of the composite number, that means that we've dropped from 55.2, which is a relatively strong number, north of 50, down to 53.2, which is still okay. A little bit softer than maybe the market was anticipating, or the economists that we've been polling had been anticipating. 53.8 was the survey number there. But certainly Spain stands out maybe as an area of stability within the Eurozone right now. Let's factor this into our next conversation. Gonzalo Gortazar, the CEO of CaixaBank, Spain's third largest lender by market value, joining us around the table. Good morning.
Good morning.
Nice to see you. The Spanish economy looks like it's doing great right now.
It is indeed, certainly relative to Europe. We're expecting close to 3% GDP growth this year, so very much differential growth.
Okay, let's talk about what you've been doing with your company. You outlined some financial targets recently. The market seems to have been a little bit disappointed, so I'm interested to get your take and maybe a kind of a setting of the record straight this morning. I think the concerns surrounded maybe the return of money to shareholders and the maybe more vague targets that you delivered upon. Do you think the market was right to react in the way that it has done? We've seen the stock dropping a little bit.
Market always reacts as it wishes. So nothing to say about it, but basically what we're talking about is a transition from a phase in which we have had fairly low growth, I would say stagnant growth in lending, so we didn't need to retain capital to fund that growth, to an area where we're seeing some growth, something around 3-4%, which means we're going to retain part of this capital to fund that growth, because this growth is coming at profitable levels.
So it's a good thing that you're not returning money to shareholders because it signals that the bank is growing. Is that the correct steer?
Absolutely. We prefer to invest the capital in the bank, provided it provides a return ahead of the cost of capital, which is the case. We're returning 15 to 17%, depending on which year you look at, which is obviously higher than our cost of capital. So retaining that money in the bank is good news for shareholders. That's what we are explaining.
Okay, Gonzalo, yes, maybe it's some of those shareholders listening this morning then and rethinking that stock market reaction. Lingering a little on the strength of the Spanish economy, what are you seeing on the ground that is driving that? What gives you confidence, or maybe you don't have confidence, that that path of strong growth continues?
Well, we are confident. We're expecting the economy to grow above 2% for the next 3 years. So slight slowdown from the current 3%, but good levels. And I think the confidence comes from the tourism, which continues to be a good boost for growth. Immigration, we are actually increasing population by over 1% a year, and the job market growing by 500,000. Half of that growth comes from immigration. And then generally, we're also seeing services. In Spain, we have a lower degree of reliance on industry and hence a smaller weakness with respect to higher energy prices.
And I mean, to Guy's point, Spain does look like this area of stability in the Eurozone right now. I mean, how things change from 2011 and from all of that period that we've covered so intensely. Does that make your job easier? The pitch to international investors, the conversation with stakeholders, is all of that easier because of the growth backdrop in Spain right now?
I would say it's easier, but particularly I would say it's nicer because it's always more fun to build than to resist. And really the Spanish economy, as you said, had gone through very difficult times, but has done obviously the work, so now we can face the future with confidence. And for us, the bank, very correlated to the economy. It's actually great to have good economic environment, absolutely.
I remember that period that Anna's talking about, because I remember the Bankia deal that you guys did. Obviously, sure. that was the kind of the M&A story of the moment, and I remember it so clearly. Do you see more M&A coming down the pipe? Do you think more banking M&A is a good idea in Europe right now? How are you thinking about it? Obviously, there's a big deal underway in Spain right now. Is that something that should be welcomed?
Well, I wouldn't like to comment on individual deals, specific ones, but generally consolidation, I think there is room for consolidation in certain countries more than others.
Including your bank?
And it's a good one. For us, I'd say we have the right size. We have 25% market share. I think that is appropriate, and we are focusing now on organic growth. But generally, obviously, not everyone has that kind of share, so it's legitimate that they look for deals.
So I have to ask you a question that continues to vex me. European politicians, they talk about wanting a banking union. They talk about the need for cross-border deals. They like the idea that we get a stronger banking sector because that's good for Europe and will ultimately help drive the European economy to the place that it ultimately needs to go. Yet when deals actually get proposed and CEOs like you say, I want to do a deal, there's a lot of wringing of hands and a lot of concern and a lot of pushback. Can you explain that to me?
Well, it's actually, if you look at, for instance, the Capital Markets Union or generally creating a real single market in Europe, everybody likes the idea, but when it comes to specific concessions, actually people are more reluctant.
Why is that? Is it because of the political chaos we see in places like France right now? I don't want to have my banking risk exposed to that kind of cross-border difficulty.
Well, it's been always there, the fact that sort of nations and states want to protect that their big companies, not just banks, are in national hands. I think we need to look beyond that to create a real market, a single market across Europe, because then we will be in a place where we could compete with the US. But it requires some sacrifices. You don't get there without having some individual consensus, state by state, sector by sector, company by company. So we all together need to do those kind of judgments.
Do you think then, Gonzalo, that we will see more cross-border M&A? I mean, this is seen by some people as one of the solutions to European competitiveness.
I am not sure that is the main solution for European competitiveness, to be honest. I think what we need is a real single market, and we don't have that. And while if we get to make banks larger, but in markets that are very different, you're not going to get the synergies that you want. You want a real single market, banking union, resolution, liquidity mechanism, deposit guarantee schemes, taxes, commercial law. There's a lot to be done.
Can I ask you something about another subject? You told me back in 2023 when we were talking about extreme heat in Spain. You told me that extreme weather was going to make certain parts of the world uninhabitable. We've covered the growth story out of Spain. We've also covered the dreadful flooding that we've seen in Spain in recent months. How are you as a bank, as a business, preparing to deal with such uncertainty on your doorstep?
Well, it's a tragedy, indeed. We're actually the largest bank in the region, and we have seen it very close to us, and we are working very closely with authorities and with our clients to make sure we help in the reconstruction. So reacting very quickly to these natural disasters is very important, and large companies like us, the largest in the area, are well prepared to do that. We are obviously incorporating all these risks in our analysis. So we have been working with the ECB for now some years on climate risks, and all these are incorporated in our models to make sure that we're not destabilized by an event like this. This is work in progress. We need to continue improving on all these, both in the bank and obviously outside the bank, to prevent these kind of disasters.
Gonzalo, thank you very much. Thank you very much for coming to see us. Gonzalo Gartazar, the CEO of CaixaBank. We thank him for joining us this morning. So perhaps political turmoil stands in the way of M&A within the banking sector and perhaps elsewhere in Europe. Let's talk about some of the political tensions that we see in Europe. Not to be outdone by France, the German Chancellor Olaf Scholz faces a no-confidence vote in his government later this month. It follows the collapse of the three-party coalition after Scholz fired the finance minister last month. An early election is due to be held in February, and polls give the Conservative alliance between the CDU and the CSU a sizable lead. Let's head over to Berlin and join Bloomberg's Oliver Crook and a guest. Oliver.
Yeah, Anna, thank you so much. I'm very pleased to be joined by Jens Spahn, who's a longtime CDU party member and, of course, been a member of the Bundestag for more than 20 years now. You'll recognize him, of course, from those daily COVID briefings. He was a health minister under Angela Merkel and has held posts as well in the finance ministry. Thank you so much for joining us. Welcome this morning.
Thank you for having me. Good morning, Oliver.
And so we're sort of beginning the conversation, I think, with the sort of obvious economic problems that we have here in Germany. The SPD and this coalition has failed to turn around despite, this warning's been out there for a while. What is your sort of treatment for the sick man of Europe to deal not just with the symptoms, but really the underlying disease within the economy here?
Well, actually, we really have a very strong disease, to put it this way. We are the only industrial country in the world which has a shrinking economy, actually, 2 years in a row. That is what we don't have seen very often in the Federal Republic. So we need a recipe for more competitiveness again. Taxes down, bureaucracy down, energy costs down, labor costs down. Actually, kind of the standard approach to get competitiveness back. But that is what is desperately needed. We need a growth in productivity. For the last 8 years, we have not seen any real growth in productivity in Germany. So we need to make this industrial country that we are, with still a big share of industry, energy-using industry that is giving into our GDP. We need to get back growth. We need to make Germany strong again, actually. That's the approach.
And one of the sort of great criticisms, I think, by a number of parties politically, but also outside of Germany, one that you've heard, I think, for a very long time, is a question about borrowing and really being able to debt finance in moments of extreme crisis. We've even heard, actually, overnight from the president of the Bundesbank, Joachim Nagel, who's been saying that basically the debt brake needs reform, there needs to be investment. Is this something that the CDU is willing to consider and looking to look at, and where to spend that money, if so?
First of all, the debt brake has really proven its worth in the last 3 years. Imagine this coalition, this left coalition, without any debt brake in the constitution. They would have made hundreds of billions of debt for consumption and social welfare instead of investments. So we need to have a clear regulation, and we want to keep it. Actually, I never want to get into a situation like France, that the markets, the spreads are forcing us to cut the budget. So the debt brake in general we want to keep. But with the debt brake, that is important to see, you can make debt. I mean, the federal government this year and next year is planning to have 50 billion of debt each year. That's 100 billion. So the question is how to better invest and how to prioritize in the budget. Less social welfare, more on defense, on investment. That are hard decisions to take. But in times of Zeitenwende, as Chancellor Scholz called it, but he never lived up to it politically, you need to reprioritize the budget.
Okay, but so then could you see, for example, an emergency fund on, say, the question of defense, for example, one of the areas in which, A, there has been huge underinvestment and the urgency of which has been very clear by the sort of war with Russia, but also is potentially a bargaining chip with a new Trump administration, which is going to want to see some spending from Germany on military and probably within the United States for its hardware?
First of all, we make the promise that what we promised in Wales out of our own interest. We are not doing this for Trump or the US. We are spending more on defense in our own national interest. We want to reach the 2% of GDP as a starting point, not as a ceiling, getting closer to 3 afterwards. I was just in Poland. They are reaching almost 5% of GDP. So we need to spend more. But first step to get there is prioritizing. As I said, the budget of Bürgergeld, as we call it, the social basic welfare system here in Germany, is as big as the regular defense budget. That is not the right relation that we see. And we want to get back growth. I mean, a country whose economy is shrinking obviously has less money to spend for defense and for investment. By the way, the whole role Germany plays internationally is because of our economy. We are the third largest economy in the world, and a country that is not growing economically will not be heard in Washington, will not be heard in Brussels or Beijing. So we need to get back growth for several reasons, obviously.
And one of the issues that could hit that growth is potential tariffs, which, as we've heard a lot about from Donald Trump, and he's taken Germany as his main target for a very, very long time. How do you envision that relationship being? You went to the RNC, you've met with the Trump team. How do you imagine the German-American relationship under Trump?
In general, I would say if we were better prepared, unfortunately, again, like 2016-17, Germany and Europe is not very well prepared for a new Trump administration. What do I mean? Why is there nothing on the table that we actually are offering to President Trump and the US when it comes to trade with China? We could say, let's have a common approach towards China, to do less, to de-risk, but then we need to do more in our transatlantic trade relations.
Is that something you would advocate if you were to be in government?
Yes, absolutely.
Away from China towards U.S.?
Yes, but I would connect the two and try to find common ground on this with the U.S. government to say, if we are an export nation, we need to export. If you make it possible to have more trade transatlantically, we can do more towards China in the regard of de-risking. So you need to make deals, as Trump would call it.
And a final question on Ukraine. What is your sort of CDU's position on how to end this war? Obviously, we're now beginning to see the sort of negotiating lines, both from Russia, both from Zelensky, increasingly from Trump. What do you think is a good resolution here? Are you open to the idea of at least paving the way for a NATO membership for Ukraine in order to end this war?
Well, most important is that it is not negotiations where Putin, the aggressor, is actually getting all he wants, like winning. So we need a solution, obviously through negotiations, that is trying to find the right balance in this very difficult situation. At the same time, we see that it is becoming more and more difficult for Ukraine. They need security guarantees for sure. However, if NATO or other ways, they need security guarantees to be able to move into negotiations, and that should be done by Europe and the US together. So actually, I would wish for a chancellor that is talking to London, Paris, Warsaw, Brussels, and then with President Trump to have a kind of contact group of Europe together with the US. Right now, this government here in Berlin is isolated in Europe. No one is talking to him, to Olaf Scholz. No one is talking to Germany, and that's not a good situation these days.
And certainly it feels like a very sort of a difficult time for Europe to not have leadership at the national level, which I think we're missing not just in Germany, but
in Europe as well.
Europe as well. Thank you very much, Jens Spahn. Thank you so much for joining the CDU lawmaker there, speaking to us this morning in Berlin on the sort of election campaign and these struggles facing the German economy and how they plan to turn it around.
Ollie, thanks very much indeed. Nice interview. While Ollie's been speaking, we've been watching Italian PMI Super Week. Up next, Chrissy in Paris. We will be returning to the French capital as we await the no-confidence vote in the Barnier government. You're looking at a live shot of the National Assembly. We will be back there in just a moment. This is Bloomberg.
general advice is continue to seek out companies or people that are maybe 1 stage or 2 stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I played drums in bands and toured America with them, did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The reason I stopped it, well, I still play, but not as serious as I did when I was younger, but drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that, we'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Conversations with the biggest newsmakers on the day's top stories. In On Site with Haslinda Anand, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Turmoil in South Korea. The opposition calls for the president's impeachment after he plunged the nation into crisis by imposing and then lifting martial law. The French government teeters on the brink of collapse as lawmakers prepare to vote in a no-confidence vote. And political uncertainty tests South Korean and French assets with gold edging higher. So good morning, everyone. A really packed show today. Let's take a look at the European markets map. There's a lot of political turmoil across the world. That's leading to volatility. That's also leading to certain asset classes being under pressure. We'll look at the South Korean won in just a second. Overall, there's a little bit of concern in the UK. We have a great story coming up with Michael Miska about how the UK, in terms of IPOs, is really losing out to other financial centers in the world. It's not because of that, but the UK a little bit under pressure. Maybe some of the commodities dragging them down. The FTSE down 0.1%. We're seeing a nice lift at FTSE MIB and the DAX gaining 1%. Cross asset, we always look at the 10-year yield. That's a rule on the pulse as we try and figure out some of the policies from the U.S. And then the bigger one that we're watching out for today, not only euro-dollar, that's again a benchmark of what could happen to euro depending on the political turmoil in France. But there was certainly a lot of political turmoil and confusion, frankly, in Korea over the last 24 hours. You can see the South Korean won currently against the dollar 1,415. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, opposition lawmakers in South Korea are calling for President Yoon to be impeached after he plunged the nation into a political crisis by briefly imposing martial law. Now, for more on all of this, let's bring in Bloomberg's Katya Dimitrieva. Katya, I mean, there's so many questions about what comes next. But first of all, do we really understand why he called martial law in the first place?
The answer is no. We don't know exactly. We can't get inside his head. But we do have some idea. President Yoon had said that it was really to get after some of the North Korean elements in Parliament and sort of a safety measure to ensure that the country can continue and democracy can continue in the country, which is why martial law is usually imposed. It's usually something imposed during wartime, for example, and that's usually when it does get imposed. In this case, however, it was imposed after, and he did it in the nighttime address last night from Seoul, and it was coming at a time when he has record low favorability ratings and also has opposition that has been calling for a lot of investigations into him and family members. And so this is why it really caught a lot of people off guard. This is why we had protesters immediately in the streets and why lawmakers gathered very closely afterwards, very shortly afterwards, and passed this resolution, this 190 votes to lift the martial law.
So what will happen today? And I guess markets are recovered somewhat, but could there be a longer lasting hit to the economy and how the country is perceived.
Yes, absolutely. So the KOSPI end of the day about 1% down. The currency is also quite weak. It was already for the year the weakest in Asia. And longer term, this is certainly expected to weigh on consumer sentiment, things like investor sentiment. So we saw in previous times in South Korea during these sorts of political events, people just spend less. They tend to save more. There's a lot of uncertainty. And the next kind of 24 to 48 hours is also an open question because there could be a different president. The president could be impeached. And there are a few candidates that we reported on who could fill that role, but it's still a big question mark.
Katya, thanks so much. As always, Katya Dmitrieva there for us, following very closely what's happening in South Korea. Now, Bloomberg also spoke exclusively to the Bank of Korea governor, Ri Chang-yong. He told Bloomberg's Aslinda Amin that the impact from the martial law order was short-lived and the political turmoil is unlikely to result in more rate cuts.
It's a relief that the impact of the market was short-lived, while it is still true that it's hard to predict the political dynamics. But I believe that the economic dynamics in Korea can be separated from the political dynamics, given our strong market fundamentals and also the matured democracy.
So do you think you've done enough so far?
No, what is enough is actually I'm very happy that the impact has been short-lived. Definitely we have to see how these political events will evolve. In the meantime, we focus on providing ample liquidity to stabilize the market. And when we look at the market, we do not see any malfunctioning. So, but on the other hand, we by expecting that in preparation for the future possible financial unrest, we actually strengthened our liquidity injection facilities, such as increasing our repo purchase agreement and also extending our eligible securities for open market operation. And so far it's okay. So far it works well. Yeah.
So far, so good. But in my conversation with a former trade minister of Korea, he did talk about how he's expecting prolonged political uncertainties. How prepared is the BOK for that?
Actually, I watched your program. Actually, I think he was more concerned on the other structural factors, not only this prolonged the political issue. But I think it's not yet decided. It's very hard to predict which options the political process will evolve. But I think you know that the Korean government officials are well trained. We are well experienced in handling the several difficulties. So I think while in government in transition or in this transition period, which we believe a couple of months, I think we have many tools and talented government officers to handle this macroeconomic situation.
Well, the Bank of Korea governor there, Ri Chang-yong, speaking to our very own Haslinda Amin. Now, to France now, another political turmoil. President Macron has called on French lawmakers to set aside their personal ambition and reject a vote that would topple the government. With the far-right leader, Marine Le Pen has vowed to support today's no-confidence motion called by a left-wing coalition. Together, the two groups have enough votes for the motion to pass.
I hope so, and it's indeed possible. It depends on the members of the National Assembly, each whom has a responsibility to the French people, to the voters of their constituency, and before France too, which is at a rather serious moment.
Now, for more on France, we're joined by Claudia Panseri, Chief Investment Officer for France at UBS Wealth Management. Claudia, I mean, we've seen a lot of political turmoil. We've seen spreads widen with Germany. We've seen actually some of the bond yields touching records that we saw in Greece. How does this end?
Hopefully it ends well, but unfortunately uncertainty remains pretty high. I think the uncertainty will keep going until the end of the year, and we need to see what's going on with the budget for 2025. The worst solution, I think there is always a positive outcome. We may see the 2024 budget to be replicated in 2025, It's sure that the deficit it will not improve, but at least there will be some stability and there is no government shutdown. It's not like in the States, so there is always a solution. That is something we are expecting at least.
How would you position markets right now, Claudia? I imagine you got a lot of calls from a lot of clients saying, I'm not sure what to invest. Do I take my money out? Do I go to cash? What's been your main advice to them?
Stay invested in U.S. assets. There is so much low visibility around European assets so far, even if valuations are pretty appealing, not only across equities, but also on some sovereign bond. I think for the time being, growth in the U.S. stocks are delivering good profit. In Europe, valuations are attractive, but at least until February the next year, we have an election in Germany, visibility is pretty low. So for the time being, U.S. stocks, sovereign, there is more appealing as well on the investment grade bonds. Sovereign in U.S. are appealing as well. So I think there is a way to stay invested, creating some opportunity if the market get under pressure. But for the time being, U.S. assets are still the most favored in our asset allocation.
Claudia, what's a good entry point for French assets?
Oh my God, I think you need to be very selective. French bonds on the short tenor, so the very short yield are already appealing. Spread have been widening on all the yield curve. I will not touch the long end because the risk is to see the spread to the bond widening again. There is a tipping point where you can start buying, but still too early. On the French asset and equities in particular, there is the market didn't make a big discrepancy between what is really impacted by slowing growth and cutting costs. Everything which is also exposed to U.S. has been underperforming. So I think there is already some opportunity to stock pick and make the selection, to make the distinction between what is exporting to U.S., what is doing, what is cheap, and what is impacted by slowing growth and uncertainty. The market didn't make such a distinction yet. Banks have been under pressure, insurers have been under pressure, luxury goods, every single stocks in the CAC as a premium relative to European peers. So selectivity, but there are some opportunity already.
Claudia, I know you're very, very cautious on France right now. I mean, and I don't really know how to ask you this question because you almost have to be a really political science to do this. But do you have to become a more political scientist to understand what it means for French stocks? I mean, whatever happens today, if there's a vote of no confidence, if we see the government collapse, does it bring Marine Le Pen closer to a presidency? And what does that mean for investors in 12 to 18 months?
I mean, you know how it works. Geopolitical risk and political risk always impact in the market, but the impact is always very short term. So every sell-off which is not fundamental justified should be an entry point. We are concerned about France, but we don't think it's a drama. There are solutions. Once again, if the government fails today, another government will be elected. The budget, the 2024 budget, can be used for 2025 as a template. Of course, the deficit will be still around minus 6% relative to the GDP. But even in that case, France is a big country with financial assets. The market is very stable. Some companies are more exposed to outside than locally. So I think that despite all what's going on geopolitically speaking, and despite the fact that the government may fail today, it's not a drama. The spread will probably widen a bit more, but I don't think the spread will widen as much to keep people concerned about liquidity. The French bonds are quite important in the asset of institutional actors, and this institutional actor will find opportunity to re-enter the French debt because there is confidence in this country, and I think there are enough assets to cover the debt over long term. Of course, it's a steady, a slow process. It will take time, but it's still one of the biggest countries in the world with a big GDP, with liquidity, and so we also have a European Commission and the Central Bank, which may jump into it and help in the case of big volatility.
Claudia, as always, thank you so much for joining us. Claudia Panseri, their Chief Investment Officer for France at UBS Wealth Management. Coming up, our interview with Arthur Delaporte, a member of French Parliament and the Socialist Party, a part of the left-wing coalition that submitted today's vote of no confidence. So we continue our coverage on France and South Korea. This is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Welcome back, everyone. This is The Pulse. We're fully on French watch. We're also fully actually on South Korean watch. Now, Emmanuel Macron has called on French lawmakers actually to set aside their personal ambition and really try to reject this vote that would topple the government and throw the country into political turmoil. This is what some of the French assets are doing. So the French 10-year yield at 2.915, 30-year 3.430. Again, the far-right leader Marine Le Pen and her National Rally Party have really vowed to support this no-confidence motion that has been submitted by a left-wing coalition, so we could see a toppling of the government today in France. That first vote of no confidence at 3:30 p.m. UK time. Well, Bloomberg's Kriti Gupta is outside the National Assembly in Paris. Kriti, over to you.
Francine, thank you so much. As you pointed out, this is a crucial day for French politics, a potentially historic one, a no-confidence motion that could pass, and hasn't really even been put forth since going all the way back to 1962. If it indeed does pass, Michel Barnier will be the shortest prime minister serving in modern French history. So you can see why this is, of course, crucial. But at the heart of it is who actually takes part in the vote. The Socialist Party is a key piece of that coalition in terms of that getting that no-confidence vote across the finish line. I'm joined now right here in Paris outside the National Assembly with none other than Arthur Delaporte, an MP for the Socialist Party, of course, here in Paris. A pleasure to have you on the program. Arthur, thank you so much for joining me. Let's start with the news here. Let's start with the newsiest thing I can find. And that, of course, is the former Prime Minister Gabriel Attal proposing a pact of non-aggression, saying that maybe we can all get together and ensure there is no confidence vote for whoever comes next. Where do you stand on that?
We say about the same thing. We want a kind of confidence agreement, which would say that we all agree that the next government will not be using ways like Michel Barnier did last year, Monday, to pass bills without votes in parliaments. If we agree on that, if we agree that the parliament will be respected, then we could have a government without any no confidence vote. And then we will have, socialists want a left government with this kind of confidence agreement with all the Republican parties in France.
Some would argue that's a very attainable goal, that you could have a left-leaning government if you don't go skew too far left. What do you say to that?
Today, the France Insoumise doesn't want to kind of participate to this negotiation to reach a kind of agreement of confidence. And maybe tomorrow, if France Insoumise stays on this position, they won't be part of any government. So we could have, yes, a left government without France Insoumise because they don't want it, but we could have the support or the non-confidence vote from the Macronist or the right.
But it sounds like that you're quite tied to this coalition that you've formed with the far left. What's the deal breaker there?
There's no deal breaker, but today we have a situation. We can't have snap elections without waiting for the 8 months. Yes. So we have today a situation. We have to deal with it. We have to make a new government, to support a new government, because we have to make a new budget for
but someone
the
argue
next year.
that stance of yours, the one where you are allied with the NFP, for example, hurts some credibility for the Socialist Party that could advance that goal. Do you not see it that way?
I don't see it like it because we are elected with a coalition, which was the NFP. So we have this program, this platform, and people voted for us to try to implement this platform. But we have to negotiate in Parliament. And everyone has to know that if we negotiate, we can reach some of the part of the program, but we can't meet all the program. And the France Insoumise wants all the program, but it's impossible. So we have to make what is possible, but we can't do the impossible.
Fair. I will grant you that one. Let's talk about what comes next year. If this no confidence vote does indeed pass, the odds are looking like that will be the case. Who should Emmanuel Macron instill as a caretaker prime minister for the sake of the French people? What name comes to mind?
I can't say any name because if I say a name, Macron can say, oh, well, that's Jean-Luc Mélenchon's name. But this is not my goal. My goal is to reach an agreement in Parliament. And if we have this agreement, then Macron can say, okay, I have this basis for the next coalition, and then make me can find a name, an MP or anyone else that could be the representative of this agreement.
Walk us through what happens in 3 months' time, in 6 months' time. The possibility of a snap election, as opposed to waiting until 2027, what's more damaging?
I think that we have to avoid snap election. We have to work with the parliament we have. We have to make a stable government because today Michel Barnier failed. He failed because he never negotiated with the left wing. So this is a major failure, and we have to change the way we are working and to find a way to have a parliamentary function, to make our institutions function with a stable parliament. But Emmanuel Macron and Michel Barnier think they are still in a presidential regime, then they can do what they want. Today, things have changed. Parliament is here, and they have to listen.
Arthur, I'm confused because I'm hearing you say that we need to negotiate in Parliament, we need to do this through the National Assembly, and yet the coalition is split into thirds. A coalition that socialists are very much a part of, that third piece. So if you split apart from their current coalition, you have more ability to negotiate and get to the goals you're talking about.
But there's no split of the coalition. There's a thing that we can negotiate with the other, and we are not in a real coalition. We have the same platform. We have been elected in the same, I would say, movement, the Nouveau Front Populaire. But then each party is independent, and each party can. And the ecologists, the communists, the socialists are saying about the same. We are saying we have to negotiate with the other. We have to be in office, but then we have to negotiate with the others.
So as those negotiations happen and the working out of the details happens, at the start of 2025, the likelihood of Emmanuel Macron needing to pass this budget via the special law, what does that do?
I think we will have a special law in the next few weeks. without maybe a new government. Maybe it can take weeks to have a new government, maybe it can take even months, but Michel Barnier will still stay in office, maybe as a prime minister within the next few weeks, and he can pass the special law.
But invoking that law triggers a very important constitutional question about whether or not you can push those emergency powers. How is that being viewed? How dire is the situation that emergency law needs to be used?
We are ready to vote a special law. We are ready, and we will have to vote the special law, for instance, to make some details of the taxation evolve for the next year. So we will do this, and there's no problem about this. There will be any today Michel Barnier is making fear over French people. Yesterday he was a bit anxious and making people anxious. But the reality is that we are a stable regime, we have strong institutions, we have a strong constitution, and tomorrow we will be responsible and we will vote this special law, even though we don't have a prime minister, a stable prime minister.
Arthur Delaporte, always a pleasure. Joining me here right outside the National Assembly, this idea of what could actually be very much at stake for the Constitution, what concessions could be made, and what really happens in the next couple of weeks, Francine. The idea that France will, one, not have a prime minister, maybe in 24 hours, and two, actually enact this special law, a truly historic moment right here in Paris.
Kriti, thanks so much. Yeah, we've seen plenty of volatility in Europe over the last couple of years. Kriti Gupta for us. In Paris, Salesforce also reporting better than expected quarterly revenue driven by optimism around its artificial intelligence products and strategy. You can see on the back of that, Salesforce getting some 12.2%. Another story we're keeping an eye on, Campari naming industry veteran Simon Hunt as its new chief executive after the abrupt departure of Matteo Fantacchiotti after just a few months at the helm. Hunt has over 30 years of experience in the spirits industry across international markets, notably in the U.S. Campari gaining some 4.3%. And then a couple of other things we're looking out for in South Korea, the defense chief offering to resign over the martial law. Again, we spoke to our reporter on the ground, still quite complicated to understand what happened. I think you're looking at live pictures of protests there on the ground. Plenty more on South Korea next. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Turmoil in South Korea. The opposition calls for the president's impeachment after he plunged the nation into crisis by imposing and then lifting martial law. Well, the French government teeters on the brink of collapse as lawmakers prepare to vote in a no-confidence motion. And political uncertainty tests South Korean and French assets, with gold edging higher. So South Korea's whirlwind stint under martial law has jolted markets. Meanwhile, traders are also watching developments in France with the government on the brink of collapse. So we're now joined by Maria Munichi, M&G Investment Fund Manager. Maria, thank you for joining us. I mean, it seems that political turmoil, or certainly political instability and uncertainty, can kind of come out of nowhere at the moment.
Absolutely. I think, what we've observed in Korea this morning was pretty unexpected. We've seen market reacting to that in quite a well-behaved fashion, though, I will say. I think they are, managing the volatility in a sensible way. We haven't seen really panic in Korean assets at large. Nonetheless, we are facing quite an important political crisis, so we will have to watch carefully how this develops in the coming days.
I mean, and again, we struggle to understand exactly why martial law wasn't paused. So again, it's quite difficult to understand the first intent of the president. Will there be any long-term, lasting impact on assets of South Korea?
Well, I think that's a very important question for markets to wait upon. And I think what we can say and that we have observed is that there has been in Korean equities in general, already quite a lot of weight in terms of market confidence not being very strong. We've seen the market underperforming quite significantly other markets this year. We've continued to see valuations being very cheap on a relative standpoint, given some of the quality of the companies within the index. So that was going to be the key question to understand. Is that going to add additional risk and is going to hamper confidence of investors going forward? I think what we are seeing, it's a starting point where valuations are quite attractive, where we see strong companies that are key players on a global scale. I mean, we see Samsung, SK Hynix, very strong players in the market. They have struggled this year, especially if we look at Samsung in trying to build capacity and trying to keep up with innovation. But nonetheless, they're very important players on a global scale. So I think it's going to be very interesting to see how much this political crisis might turn into an economic crisis and then affect those companies. But from what we've heard also from the governor of the central bank this morning, it feels like things from an economic standpoint are still very much under control, and they are pacing their monetary policy in a way that is in line with what was expected.
Yeah, we were kind of joking that it's always up to the central bank to mop up some of the political mess left by heads of state. Maria, talk to me a little bit about France. So this, frankly, is not the first turmoil that France has even seen this year. If you put that into context, do you stay away from French assets, or is there a good entry point?
Well, I think, again, in an interesting way, there is certainly a political crisis developing, but the effect on assets hasn't been as pronounced. We have seen decline in value. We have seen the widening on the spreads on the French bonds versus German bonds. We have seen French equities underperforming of late, but it's not signaling panic per se. And some of those trends we have observed already since the middle of this year. So we've seen the CAC underperforming the DAX quite significantly for an extended period of time. So I think, again, the markets are behaving quite reasonably and waiting what the importance of these events are in markets for what we can know today. That doesn't mean that there aren't opportunities on a more stock-picking basis, especially within the French equity space. But nonetheless, I think, again, the response has been quite measured. So there isn't a pure tactical opportunity at the moment in these assets. But I think if we look longer term, on a medium to long-term basis, there is some value in those areas that could start to be interesting.
But do you suggest your clients just look elsewhere, i.e. the U.S., given there could be a Trump trade that further lifts some of the equities?
Well, I think a lot of the, in terms of investors positioning for a continued rally in U.S. equities has unveiled, and there is probably quite a lot of it in the price of U.S. equities already. Obviously, we are in an environment where it's not just the price that has moved in favor of U.S. equities, but also fundamentals have been supporting this. We've seen earnings continue to do very well. We have potentially some policies that will continue to help the U.S. exceptionalism going forward, being taxation, being the push for innovation, and the ability to compete in global markets for these companies. But nonetheless, I think we have to be a bit cautious in that regard, because valuations are stretched in some areas of the U.S. equity markets. So I think what will be more interesting going forward is to have a more diversified approach to assets that have more attractive valuations, especially in a medium to long-term view. But there is still a possibility that U.S. equities will continue to outperform in the short term. But I think it's important to also not lose sight of what valuation is telling us relatively to other markets. If you look at history, it has been a good indicator of future performance on a longer period of scale, so 5 to 10 years. So we cannot forget that.
Yeah, and Maria, I guess, are we also forgetting sometimes that if there are trade tariffs that could be even more aggressive than 10 to 20%, then the global economy could have a significant downfall, and that doesn't seem to be priced in at all.
Completely. I think, when we think about tariff, the market has tended to look at the first level consequence of those tariffs, which are potentially beneficial for the US, etc., or slightly inflationary as well. But there hasn't been yet, an effort to move to the second level consequence of those tariffs and what that could be for global markets and for the global trade. And I think, depending on how those tariffs will work out, I think that will be an important area to look for investors, to try and understand how the dynamics around global trade might change as well. So, for example, countries that today are seen as strong losers from those tariffs might actually find a way out of it that will benefit them.
Maria, thank you so much, as always, for joining us. Maria Muniki, their M&G Investment Fund Manager. Now, the political uncertainty, of course, extends to Eastern Europe, where Georgia's constitutional court has also rejected a challenge to the results of October's parliamentary election filed by the country's president. This comes after violent clashes in the capital were sparked by the ruling party's decision to delay EU membership talks until 2028. Well, I asked President Zurabishvili whether she'll resign.
The situation is not linked to first of all, I don't have to resign. I have a mandate which goes until a new president is inaugurated. Their president is going to be inaugurated by the end of the month. It's not an election that is recognized by the population. So I will continue to represent the voice of the people that want their vote back, their future back, their European future back, and I will stay, which doesn't mean that it's not an alternative power, because I don't have any power. I'm staying in the constitutional framework completely, again, despite what the official propaganda is trying to portray. But there has to be someone that is the voice of the nation that wants to keep its European future, and I intend to continue to do that and to be also the contact point for our partners, our European and American partners, for the media, the voice of the people.
President, as you say, the current wave of protests is quite big but decentralized. Could you help in actually forming more institutional, so that information goes into one direction, so that everything's processed in a more cohesive way?
No, because there is no way in which it's not my role as a president, and if I wanted to have that role, I couldn't exert it, to be the organizer of the protest. What I can be is a bridge, a relay, in case the authorities want to open some form of dialogue with the people that are protesting on the streets when that time, and if that time comes. I'm the bridge between the people that are protesting and the outside world, because I can express their demands, and I have the trust of our partners abroad, but I certainly cannot organize, I cannot stop, I cannot accelerate. All that is in the hands of the people, and it's very, that is linked to this decision of the Constitutional Court. When you close one by one all the possibilities, what you are doing, in fact, is increasing the frustration of the people that are on the streets, and everybody knows that the increased frustration can then lead to anything.
Well, that is the president of Georgia, Salome Zurbanishvili, speaking to me earlier. Now, coming up, the UK stock market shrinking at the fastest pace in over a decade as companies get snapped up in takeovers. We discuss that next, and this is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people
that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Well, the U.S. Secretary of State, Antony Blinken, has welcomed the South Korean President Yoon Suk-yeol's announcement to lift martial law. Now, Yoon's decision to rescind the order just 6 hours later came after a unanimous vote by the National Assembly to reject his declaration. Let's get more with Bloomberg's Kevin Whitelaw. Kevin, I have so many questions, and frankly, there are very little answers at the moment. Do we know why he called martial law?
Well, as best we can tell, it seems to be just sort of an effort to try to stay in power and try to push some things through that were being blocked by the opposition. But I think ultimately it just looks like an enormous sign of weakness and really alarmed and sort of shocked the rest of the world, including a lot of its allies who are sort of now questioning, you know, a little bit the reliability of democracy there, although obviously the democratic process seems to have prevailed there. But, you know, as we're looking for toward the transition in the United States with Donald Trump becoming president, it's a very tough moment for South Korea, which had already been worried about what Trump might do to sort of change policy vis-a-vis North Korea.
Kevin, thank you so much. Kevin Whitelaw there with the very latest. I think we'll have plenty more, of course, on this analysis on the political crisis unfolding in Korea. We're also joined by Edward Howell, Korea Foundation Fellow at Chatham's House Asia Pacific Program. Edward, I mean, following on what Kevin was saying, I guess the concern is that, is this a president gone rogue? Is there, you know, real concern out there? And what does that mean for the next 24 hours?
So the initial announcement of martial law was very surprising and very shocking and caught South Korea and the world by surprise. It lasted only around about 6 hours, but I think the end is not yet nigh. We've already seen earlier in the last few minutes the fact that the South Korean defense minister has offered to resign, and other senior presidential staff have also tendered their resignations. I think this highlights how President Yoon is in a very precarious situation because his popularity was already very, very low, around about 17% in November. And my concern is that yesterday's events will have lasting implications. It's a sort of own goal for the president because this is going to catalyze even further backlash on the part of those who oppose his policies, particularly on the political left.
But I guess the concern, Edward, is that, I mean, could this happen again? And we've seen markets really, you know, feeling the jitters. I mean, there was a special Bank of Korea also meeting where they talked, they didn't need to, but they talked about possibly intervening. Will there be long-lasting legacies because of this?
I think so. I mean, I think we need to bear in mind that South Korea has been no stranger to protests in the past, whether it's the walkout of the junior doctors recently, or in recent memory, the impeachment and ultimate removal of power of the former South Korean president Park Geun-hye. This incident, yesterday's incident, though, I think highlights how South Korean politics is very fragile and polarized. And I'm not just talking about the division between the ruling party and the opposition party, but even within the ruling party, the ruling People Power Party. Okay, we did see immediately after Yoon announced the imposition of martial law, the fact that the head of the ruling party said that the move was wrong. So there's a lot to be recovered here. And this is particularly concerning at a time when there is a need for unity. And what do I mean by this? By this, I mean there is a need for South Korea to unite, to work with its allies, with the United States, with Japan, because North Korea's threat is not abating. It's getting worse. It's getting increasingly belligerent. The economic coercion and political coercion from China as well is also not abating. So the fact that domestic political polarization is taking place in South Korea means that this might hinder South Korea's more robust foreign policy.
But what do we know about China's role in this, actually? I mean, you mentioned China. It was interesting because we wrote a couple of pieces on what this could mean also for how this could influence foreign policy of the U.S. going forward.
Predominantly, this is a domestic matter, but obviously domestic and foreign policy domains are inextricably linked, and particularly in East Asia. And I think that one response to look out for is actually from North Korea. North Korea hasn't yet commented on this, but as we've seen, North Korea likes to take advantage and exploit political crises happening in South Korea. North Korea likes to lampoon South Korea. North Korea likes to deride South Korea's democracy, South Korea's role as a democracy, as a full-fledged functioning and flourishing democracy, bar these aberrations, okay? And so we need to wait and see. I wouldn't be surprised if North Korea were to issue quite a scathing statement, because this is what it did with the Park Geun-hye scandal, for instance.
And in terms of that statement, what does that mean? Again, who are they trying to speak to?
They're trying to speak to their own North Korean domestic population, but they're also trying to speak to foreign audiences and signal to foreign audiences, okay? Because North Korea wants to put a block, a wedge in the South Korean alliance system with the United States. We've already seen North Korea increase its provocations towards South Korea this year, whether that's through artillery fire or the deployment of balloons filled with refuse and excrement. And these provocations ordinarily, bar yesterday's events and today's ongoing events, would increase this year, are likely to increase this year in my view. So I think that North Korea will try and capitalize upon this situation for its own benefit.
Edward, what do you think? What will you be watching out for the next 3 to 4 days? I know we're seeing a lot of protests in the street. Is impeachment now almost a done deal, given what proportions this has taken?
Nothing is a done deal in politics unless it has been done. I think we will be looking out for the development of protests, yes. We will be looking out for further resignations, if this happens, of Yoon's cabinet. And obviously, as you mentioned, we will be looking out for questions of possible impeachment and what this might lead to. Okay, this has shaken up South Korea, I think. Martial law has been revoked, fine, okay, but the long-lasting effects will be clear, because not too long ago, as I have mentioned, in very recent memory, South Korea also had their president impeached, okay, Park Geun-hye. So we need to bear this in mind. I will also say, just to conclude, that the opposition party, the leftist party, led by Lee Jae-myung, we must remember and that actually they have their own agenda as well, and we cannot accept their view uncritically. We must look at both sides with criticism and skepticism. Yeah. It's very important here. We must be nuanced.
Edward, thanks so much. Edward Howell there, Korea Foundation Fellow at Chatham House's Asia Pacific Program. Up next, Bloomberg Brief, Danny Berger and Manish Krani in New York. We'll follow very closely the developments in France, South Korea, and of course the U.S. This is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups, is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Notch another record. Fed Chair Powell sets the tone today. Political drama from Asia to Europe, a call for the president's impeachment in South Korea, and France braces for a no-confidence vote. And the OECD warns global stability under threat. The chief economist, Alvaro Pereira, joins us later this hour. Good morning, Manus.
Danny, good morning. Check in on that 55, knocking on the door of 56, maybe 56 record highs today. Let's see how we trade out. A quarter of 1%, $11 trillion in value has been added in 2024. Yeah, the skew is completely one-sided according to Citigroup, but if you believe in U.S. exceptionalism, as Barclays' Emmanuel Cao does, it will extend into 2025, led by cyclical and value stocks is his view. Roll it over, have a look at the bonds. Again, I wonder to what extent do bonds, if at all, can play a role in the political chaos that we see in South Korea or the French risk. We'll talk more about that through the show. Yields pop higher by 2 basis points this morning. Powell speaks today at the New York Times Deal Book Summit. That indeed will capture the tone. Don't forget, November the 14th, he said move carefully. Roll it down, have a look at the Korean won. We are in the throes of an impeachment call from the parliament yesterday, which was what you can see the spike higher in the dollar, down in the won, which was when the martial law was implemented. Then it was withdrawn after 6 short hours. Danny, we've undone 50% of the losses yesterday.
Well, it just really underscores the fleet of U.S. assets, whether you look at the dollar, whether you look at stocks at 55 all-time highs. Also talking about growth, but have we really priced in the worst of what we could get next year, i.e. tariffs and inflation? Sam Linton-Brown, head of global microstrategy at BNP Paribas, argues no, pointing to 5-year break-evens, that they are still not high enough to price in what we could get next year. Still below 2.4%. I'm pleased to say that Sam joins us now again of BNP Paribas. So Sam, what would it look like to price in tariff risks for next year? What should this chart appear to be?
Good morning, Danny. Good morning, Manus. 5-year inflation expectations in the US, as you point out, right now are at 2.4%. We don't think that takes Trump seriously or literally enough in what he's saying on tariffs. There's usually a 30 basis point difference between CPI, that inflation break-evens are based on, and the Fed's inflation target, PCE. Put differently, at 2.3%, 2.4% in 5-year inflation expectations, that means the market prices in the Fed hitting its inflation target on average over the next 5 years. We simply think that's too complacent. It's not pricing in enough inflation risk premium associated with Trump and tariffs.
With that as your base case, Sam, how do you see the progression? The narrative from the Fed speakers over the past couple of days was still erring towards a December cut. But if you think we're underpricing the tail risk of an inflation renaissance, then how much shallower and shorter will the Fed's cutting cycle be in 2025 for Paribas?
We expect the Fed to cut in December, and I think what we've heard from Fed speakers recently, in particular, I'd flag Waller, is that the burden of proof is on the data over the next couple of weeks, in particular payrolls and the inflation data that we'll get to surprise on the upside, in order for the Fed not to cut in December. I think the key, though, is if we think about, for example, the summary of economic projections, we'll also receive those in the December meeting. What they might show is that some FOMC participants are beginning to incorporate tighter control of the borders, tariffs, on their forecast for the economy as well. And that could be reflected in slightly higher inflation, lower growth, and in turn projecting fewer Fed cuts for next year.
Hang on, Sam, if I can jump in there, because that's an important point, because to this point, the Fed has avoided talking about the politics at all, saying that they're going to handle it as it comes in. Do you expect them to head-on address what the political economy is going to look like next year?
We don't expect Powell to say anything direct about it in the press conference. We'd expect a similar line to what he has been following recently, which is we can't react before things actually occur. But in practice, the Fed are having to deal with risks. And so they need to be very mindful that if they cut rates too much too quickly, and then there is an inflation shock, a negative supply shock effectively from tariffs, that they run a risk of inflation being too high and potentially that having a feed through to expectations. So I think what we'll see in the summary of economic projections is that each FOMC participant is effectively making their own assumption on the path for policy that might, and the path for, I should say, tariff policy, border policy, which in turn will create quite a confusing message, I think, from those projections, as not everyone will be incorporating the same assumptions into them.
How much more aggressive can 2025 be relative to, let's say, 2016, 2017, 2018, when the tariffs really rolled higher?
The timing here is very difficult to pinpoint, as you point out, Manus, as there's clearly a lot of policy uncertainty, both in terms of actual implementation and when that implementation might occur. I think from an investing perspective, what that means is that as one looks to hedge inflation risks, we would advocate doing so via slightly longer tenors, for example, 5-year, rather than shorter tenors that are going to be extremely sensitive to the actual timing of when tariffs get implemented. I think, again, pairing a view that inflation expectations are underpriced, that tariff risk is underpriced, pairs quite nicely as well with a bullish dollar stance.
Sam, it has been this moment where we're contemplating a global rebalancing and the pain that might cause, whether it be from the U.S. and tariffs, or looking at the political drama abroad in South Korea, reminding us how important that country is in the supply chain and what it could mean and the upheaval we might get for next year. At what point does that stop being U.S. dollar and U.S. asset positive? Is there a point where it crosses a threshold and is bad for American assets?
On the face of it, it looks like uncertainty globally is rising. Yet, as you were just pointing out, the S&P is printing quite an impressive run of consecutive all-time highs and vols falling. So for now, the market doesn't seem very concerned, at least as it pertains to US risk assets. I think certainly across the course of next year, there are going to be moments when that narrative shifts, and shifts very suddenly, and the market does become more concerned. But I think for now, it seems the market's quite comfortable to price a growth boost from deregulation, and is a bit less concerned about the negative growth impacts of less labor supply into the US, and also the negative growth impacts that might come from tariffs. For the relative story here, I think this is where currencies are key, because naturally that's always a relative play, and I think it all really favors the dollar.
Well, Sam, where do you come down? Because I know Danny was debating this with a number of guests yesterday. There was a great article in the FT talking about American assets on the equity side. overowned, overvalued, and overhyped as never, ever seen before. Now, can that translate? I mean, that's the equity story, but that can, to a certain extent, translate into the dollar. A number of people are saying it's very stressed, overloved, and overowned. It was actually Muchir Sharma, excuse me.
Yeah, I think many people have had that view for both the US equity market and also the dollar for quite some time, but they probably would have had it at the beginning of this year and perhaps the year before that as well. And the secular trend seems to really be quite strong there. I think as it pertains to the currency, it is true. The US runs a large current account deficit. That means in order to finance itself, it requires foreign investors to put money into the US through building factories or through buying companies and also through buying assets, bonds and equities. I think the risk to the dollar would be if at some point the market was concerned around the Fed's independence, then you could see a very significant repricing higher and steeper in the US curve, and that could also be associated with a weakening of the dollar. But I think provided that's avoided, then the US should be quite comfortable in funding that current account deficit.
Well, let's see whether Mr. Bessent does float the idea of a shadow chair on the Fed. That could be a bit of a dislocating moment for the dollar. Sam, thank you very much. Sam Linton-Brown there of BNP Paribas joining us this morning. Let's get you some other stories trending on your Bloomberg terminal this morning. Salesforce reported quarterly revenue that topped analyst estimates, boosting investor hopes that AI will boost results. The company pivoted its strategy to focus on tools called agents, which are designed to complete the tasks such as customer service or sales development without human supervision.
Elsewhere, people familiar are telling us that the $60 billion proposed management buyout of Seven & I will include plans to IPO its U.S. assets. That's intended to help ease financial concerns. Seven & I intends to retain a stake after any potential listing.
President-elect Trump is considering Florida Governor Ron DeSantis as the possible replacement for Pete Hegseth. That's to run the Pentagon, according to the Wall Street Journal. This comes amid Republican senators' concerns over mounting allegations about the former Fox News host's personal life.
Coming up, the OECD warns of dangers from trade tensions to debt. We're going to catch up with the chief economist, Alvaro Pereira, who will be joining us next on Bloomberg Brief.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
While overall this economic outlook shows a resilient picture, significant risks and uncertainties remain. First, geopolitical tensions and conflicts remain a key concern. Second, pressures are rising on global trade. Third, high public debt creates significant vulnerabilities. Rising spending needs related to population aging, defense requirements, climate action, and other structural pressures will likely increase pressures on debt sustainability.
That was the OECD Secretary General Matthias Gorman there speaking just an hour ago about the risks facing the global economy in the coming year. For a deeper analysis on those risks, we're joined now by the Chief Economist for the OECD, Alvaro Pereira. Alvaro, good morning, sir. Good to have you with us. When we look at some of the warning signs and signs, we'll talk about those.
Good to be here.
Great to have you with us. We'll talk more about those in just a moment. But you project strong growth, 3.3%, and inflation falling. How much certainty do you have in these projections? Because the tail risks are significant for 2025 and 2026.
Well, we remember, it's important to put things into context. In the past 5 years, we had a pandemic, which led to a lot of lockdowns and a huge economic disruption. We also had the biggest energy crisis in many countries since the 1970s. And in spite of these two shocks, the world economy continues to have a very good performance. So we're talking about this year 3.2%, next year 3.3%. And so we think that there's a lot of good things happening in the world economy. I would like to highlight two things that I think is important. First, the United States, close to 3% growth now and close to 2.5% next year. And this is mostly because of investment and something that we really like, which is productivity growth. And we think this is possibly related to the AI, so we can come back to that if you want. The second part is that many EMEs are doing really well. India growing close to 7%. We have Brazil growing 3%, and many other countries doing fairly well, like Indonesia. So we think there's good reasons for us to be positive about the world economy. We highlight the risk because obviously an escalation of conflicts could disrupt the world economy, and we think that what we've seen in the past 15 years is a steady rise in protectionism and import measures, restrictive measures. And so we think that obviously if there's an increase in this trade protectionism, this will have an impact on trade and growth.
Alvaro, you've already seen unrest and changes sweeping throughout different governments, and you in your report point to significant differences throughout regions. Yes, there was resilience, and there has been resilience in this global economy, but where do you see that falling short? If we have President-elect Trump putting in sweeping tariffs, what regions might not have that same resilience as we've been used to in the past?
So I'm not going to comment on policies that have not been legislated or announced. We're talking about promises that were done in an electoral campaign, and so I don't think it's appropriate to comment. What we think is important to say is that continuing and fostering dialogue between countries is absolutely essential. What we know about trade is that trade in the past few decades has led to more than 1 billion people getting out of poverty. We saw significant growth of the world economy partly because of world trade. So we think it's important to keep the dialogue open between countries so that we get good agreements and we keep the open markets going forward.
Alvaro, you talk about the strength in the United States, investment and AI, but to what extent is that strength and exceptionalism in the US going to be driven by full deficit implementation and the promises that President-elect has made over the AI proposition that you put on the table?
Well, on fiscal front, we highlight that it's absolutely essential for the United States to have a medium-term plan to be able to put debt on a downward trajectory. Right now, that continues to be high and it continues to rise, and we think that it's very important to work on the fiscal front. On the AI, I would like to highlight, this is what I'm saying. The last 2 or 3 years, we've seen productivity growth being fairly robust. A recent paper from the OECD shows very clearly that in the next 10 years, we expect, when you look at different sectors, that AI might have an impact on labor productivity between 0.4 and 0.9% per year. And this is very consistent with what we see in the numbers, where we had productivity growth around 1%. Now we're having close to 2%. And we think this is related to AI. Why do we think that? Well, not only because of these paper and estimations that we had, but also we see that a lot of the investment that we see in the United States is exactly happening in the ICT sector or related to AI. And so because of this big investment, this is boosting productivity as well. And so I think there is a good chance that we have the United States continue to be a very robust economy going forward.
Elsewhere, though, Alvaro, not far from where you are in Paris, the National Assembly is going to be preparing for a no-confidence vote for this current government. We're at a time where there's political upheaval, not just in France, but in Germany, really the core of Europe. When it used to be the periphery that was the problem child. This change, this upheaval, how big of a threat is it to the wider European economy?
Well, obviously, Germany growing, well, almost no growing this year. It's a source of concern. We expect that Germany will grow around 0.7% next year and do a little bit better in the following year. But we still think that Germany needs to undertake several structural reforms to make it more competitive, not only to boost the labor market and the growth potential by fostering, for example, female participation and also fostering the integration of some youth and older workers back into the labor market, but also undertaking reforms to, especially in the service sector, where we think there are still too many barriers to competition and entry. So those are areas that we think that Germany should focus, together with investments in digital infrastructure, which Germany is behind many OECD countries. With regards to France, we've been highlighting for many years that spending is fairly large, and in fact, we see that the deficit right now is large, and that trajectory continues to be upward. So we think that going back to fiscal discipline is essential for France to address these issues. So we believe very strongly that the next few years is crucial to have a medium-term plan to have fiscal discipline and to bring that back on a downward trajectory. So I think that's the essential part that we should focus, independently what the government we're talking about.
Alvaro, thank you for being so kind with your time this morning. That is the OECD Chief Economist, Alvaro Pereira. All right, coming up, as we've been talking about political turmoil taking over, we're going to discuss the unrest in both France and South Korea coming up. You're looking now, live pictures of Seoul, South Koreans there out on the streets. You can see some of them holding signs calling for the president to resign. Opposition parties have also called for an impeachment of President Yoon. Again, we'll have the details for you after this break.
Good.
You missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This political event was very short-lived, and I do not see any reason why it has to change our economic outlook at this moment. We are still, at this moment, stick to our forecast, but I believe that our growth forecast will be more impacted by the structural factors.
The governor of the Bank of Korea there praising the stability of markets in the face of political turmoil in South Korea, where opposition parties have submitted a motion for President Yoon's impeachment after he shocked the world by declaring martial law. The defense minister this morning also offering to resign and apologizing for causing confusion. Joining us now is Bloomberg's Katya Dmitrieva. Katya, at one point the won fell by more than 2.5% versus the dollar. We've undone most of that. But are there any lasting impacts from the past 24 hours?
Yeah, as you noted there, the currency sliding. We also had the cost be down more than 1% on the day. So those are sort of the short-term impacts, as well as all the mayhem we saw on the streets of Seoul kind of overnight last night and into this morning. More long-term and sort of the answers we don't have right now are also a lot of the important ones. So what's going to happen to consumer sentiment, business investment going forward, because amid all of these impeachment proceedings, that'll be over the next 24, 48 hours, but then who will be the leader after that? The actual impeachment process itself can drag on for a few months. So that will put a damper on spending. People will be more likely to save. And there's no clear candidate who would be the next president. So kind of the next 2 days will be very important to watch to see what those impacts would be.
Okay, well, certainly we'll be focused on that and on the currency. Of course, President Yoon, his popularity the lowest since he was appointed, and that's back in 2022. Katya, thank you very much. Katya Dmitrieva there on the South Korean situation. Political turmoil continues around the world. To France, lawmakers are gearing up to hold a no-confidence vote there later today on President Macron, urging a rejection of the call. So the government doesn't topple. Joining us now is Caroline Conin at from the National Assembly. Caroline, it's going to take pretty much a miraculous moment from the Barnier method to negotiate his way with Marine Le Pen. Macron is in Saudi Arabia. He's not even in France at the moment.
Macron is in Saudi Arabia, as you mentioned. He's coming back supposedly tonight. We don't know exactly what time, but perhaps around the vote of no confidence, which is supposed to happen behind me in the National Assembly. The debate starting at 4 p.m. French time.
Okay, Caroline,
that's around
thank you
10
very much.
ET.
That is Bloomberg's Caroline.
institutions you've been very philanthropic with is your alma mater, Harvard. But recently, you've been very public about your criticism of the way Harvard handled the events of October 7th and their aftermath. Could you talk about that now?
The first reaction of a group of 34 Harvard student clubs on the morning after October 7th was to put out a statement saying that Israel was 100% responsible for the acts of Hamas. And my view on that was, that's ridiculous. You can come out and say, look, I'm very unhappy about Israel's treatment of Palestinians in the West Bank, or you can say, we can talk about the Gaza Strip, but you can't support terrorists, and particularly terrorists that rape and pillage and murder and burn and take hostages. Well, I got actually a text from a CEO in my industry. He's like, Bill, you know the people at Harvard. I'd like to know who the students are behind these clubs, so I make sure I don't inadvertently hire them. And so I tweeted out that sort of made that point, and caused a bit of a firestorm, and I got a lot of pushback. Why are you picking on students? And I said, look, you can't hide behind a corporate entity if you're going to support terrorism.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger alongside Manus Cranny. Let's set your agenda.
55 all-time highs. Stocks notch up another record this year as investors await remarks from the Fed Chair Powell. Political drama from Asia to Europe. South Korea's opposition parties call for impeachment of President Yoon. France braces for a no-confidence vote. And investors get another shot of AI hope. Salesforce gets a boost from their earnings, top the street's estimates. Danny, good morning. 55 records in a row. Can we push it out to 56?
Yeah, and Salesforce helping out tech stocks this morning. You can't see them there, but the NASDAQ is outperforming by 0.5%. The S&P up 0.2. Your 10-year yield, that pushes higher too. There's an intraday sell-off for bonds yesterday. JOLTS showing tighter labor markets than expected. Those leaving jobs, the highest since 2.1%. And the dollar is still stronger, Manus. In this environment where global chaos and U.S. tariff expectations, all that does is just feed back into the U.S. dollar.
Yeah, it's interesting. It is the dollar that's ground zero for the reaction function on the geopolitical front. Last week, it was the bond market that was perhaps a little bit more of a receptor of defense. But this movement in the yuan, and the question becomes then, how much of the political chaos in France is priced in to the euro? If you look at some of the options market, it's going to be pretty hard to get to parity. And a lot of our guests have already said, look, a lot of negative news is already in there.
Well, yeah, and it matters if it moves the ECB, and it doesn't seem like at this point it would influence them at all. I do think it's sort of an interesting threshold. At what point do you get not just a dollar bid, but a treasury bid to get that haven bid? We haven't seen that because the U.S. economy is still so strong. Now, even though that's really fueled dollar bets, our next guest does write that they've downgraded the U.S. dollar view through year-end, reflecting the large buildup of positioning and stretch read across our short-term fair value models. That is Mark McCormick, who's joining us now, Global Head of FX and EM Strategy at TD Bank. Mark, even though you've downgraded your short-term dollar view, everywhere else in your research, you give reasons to be bullish the U.S. dollar. So any sort of pullback, how short-lived might it be?
Yeah, I would say in terms of talking pullback here, we're talking weeks. These type of indicators like positioning, short-term fair values, these guys have a half-life of under a month. So this is kind of our expression through our weekly dispatch, and it's just a way of kind of articulating a trading stance that, as we go into year end, there's a lot priced in. If we look at our positioning indicators, we've seen over a 1 standard deviation move in the dollar. Pendulum has basically gone from, the weakness in U.S. data, the Fed pricing. We've swung all the way back to the other side where our models are actually, very long the dollar, and it looks stretched. But that's a very different strategy than thinking the next 3 months, the next 6 months. So it's more of a technical understanding of the markets, and people like to look at charts and they like to look at certain technical indicators. We use models that kind of help us understand technical signals. and we incorporate that into our short-term view. So I would say this is a view to think about in terms of the next couple of weeks.
Well, I think when I had HSBC with me last week, they said, look, if the dollar was an equity, it would be a hold for them right now. When we look at the confluence of factors supporting the dollar and driving it, one is asset exceptionalism, one is rates, and one is geopolitical risk. And when they're eye of the storm of geopolitical risk in France and South Korea. But if there is some kind of a reduction in Middle East risk and Russia risk, Mark, that huge leg of the geopolitical stool, what would that do to the dollar?
That one's interesting. I think it provides a little bit of a cushion for the euro. Again, our forecast is for 101, which is basically a hit of parity early next year. I think the key thing that's come through in the Middle East and what's come through on Russia is really an energy story. And so energy actually hasn't really moved a lot in the last couple of months anyway. The bias has been a little bit more weaker on the energy prices. So that has not obviously provided too much of a support to the euro. I think, again, I have to bring it back to, one of the things is the U.S. economy is still quite strong. So again, the context of where we're going here is if we get deregulation, tax cuts, growth policies, all these things, core PCE is still above target. We're basically landing here around 2.5%. So if Trump can find a way to stimulate the economy while inflation's above target, it's still a higher for longer Fed. We still look for the Fed potentially have to pause in the early part of next year. So the dollar has the carry story. You get the equity story, and whether or not the ECB has to move a lot, you're already going to see rate differentials move against the euro. So I feel like, again, one of the burden of proof for the euro is there a reason to buy European equities? Is there a reason to put further investment allocation into Europe relative to the US? And to me, none of that is actually fully priced in. And again, while we're talking about positioning and short-term valuations, those things kind of show, again, where the market swings on a short-term basis. But from a medium-term perspective, I don't see anyone kind of downgrading the outlook for the U.S. to say now it's time to be overweight European assets.
Well, when it was 2016, heading into 2017, there was this assumption that Trump comes in, it's bad for emerging markets because of all the tariffs. Mark, it didn't quite play out that way. And I wonder if this coming year is going to be the same. You're talking about all the growth positive policies to come into the U.S. Is that going to be something that just benefits the global economy wholesale, that the peso, the yuan, currencies like that can benefit from American consumers continuing to buy?
It's going to be interesting, right? Because I think what we're going to see is a bit of a rotation. We kind of think about FX in sectors, or we call them factors, and there's different factors that work in different market environments. The one factor that everyone's been focused on for years has been EM carry. I think what's going to be challenging is that is a story that kind of looks at EM carry, and I think the problem is all the things we've seen this year is the geopolitical uncertainty, the higher macro volatility that's associated with that, the uncertainty that's coming through everything that we're seeing. These are all pieces of the same story. If you think of South Korea, if you think of France, if you think of Germany, think of what's happened in the US. This is a rejection of the incumbents. This is part of the geo-macro framework that we're kind of underpinning in terms of how geopolitics interacts with markets. So to make a bullish case for EM, you have to make a bullish case for carry and FX. And I don't think that's where we're going. I think you can make a bullish case for certain currencies in EM. And our view is actually in the second half of the year that EM Asia and also the yen, which represent the most value, are the currencies that will actually do well because China has a lot of dry powder. They can stimulate their economy. We are going to see rate cuts. The Bank of Korea basically surprised with a rate cut last week. So essentially, there is room here that there is a value rotation that can happen in EM Asia. But I don't think this is a broad EM trade. I feel like EM carry is still going to underperform. We've been seeing it across our factors and models that EM carry is kind of a loser here. And again, if you're offered higher carry from the US dollar, there's not a compelling reason to go into the Mexican peso or to be in the Brazilian real right now, or other currencies where the Sharpe ratio, the volatility adjusted returns just aren't as good as the US.
Well, you've got multiple calls on the yen to be long the yen against the euro and a number of other G10s. You mentioned China there, and you do say that the dollar strength will be the weapon that forces China and America to come quicker to a rapprochement in the trade deal. I just wonder, in that process, Mark, will the PBOC, will the Chinese permit as much of a devaluation as they did back in 2018?
We think there are going to be limitations to how much they let the currency devalue. Our actual official forecast is for 745. I think part of this is, again, the game here is confidence. So the currency is a reflection of national confidence. And I don't think, while some people I think might be looking for dollar China to move 7.75, maybe 8, if there's an aggressive trade war, we think they will find ways to limit how much the renminbi depreciates, either through injecting swap lines through the banking system or job owning or using the fixing rates. We don't think we're going to let the currency go, using kind of air quotes there. I think, again, the primary currency that's going to feel the much of the pain here will be the euro. Again, there's as we see, the French government is on the verge of essentially a lot of challenges. And again, we don't have elections in Germany till February. So again, we have a lot of uncertainty. And again, if you look at the data, we're all still data dependent. The data in the US is still better than all the other places that we're tracking. So again, I feel this is still partly a macro story. There's still a geopolitical angle to it as well. But I feel like the key thing that Trump introduces is macro volatility into either FX rates or relative equity. So again, I think kind of the key thing here is there's going to be limitations on how much dollar China can move, which means if you want to trade some of these global themes, you're going to have to go more into the euro. And again, this is why we like the euro versus yen, because there's a reason here that the yen should be a lot stronger, whether it's through local political incentives or global political incentives to find ways to strengthen the yen.
So, Mark, it all begs the question, what are you more confident about next year? The dollar's strength or Chelsea being able to stay atop near the Premier League table?
I have more confidence that Chelsea will do better than the Chicago Bears, and the dollar will outperform the Bears.
I hope no Chicago fans are watching, man.
Always good to round off with a little bit of sport. Mark, great to see you this morning. That's Mark McCormick over at TD with his calls on football, American sports, of course, the Euro. We'll be with you in just a moment. From New York, good morning.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage, and what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It is Bloomberg Brief. I'm Menace Rennie alongside Danny Burger here in New York. To France, the lawmakers are set to hold a no-confidence vote later today, with President Macron urging a rejection so the government doesn't topple. Joining us now, it is Caroline Conan from the National Assembly. Caroline, it looks like this train, the TGV political train, has already left this station. The no-confidence vote will come. The question is there anything at the last moment can pause this?
President Macron, as you mentioned, from Saudi Arabia, actually called for lawmakers to wake up and not topple this Barnier government. But it does seem that this Barnier government is living his last few hours. In 4 hours, the debate on the vote of no confidence starts right here behind me at the National Assembly. And even though Michel Barnier said on the 8 o'clock news last night that he had some hope still that his government would survive, there is indeed very little hope, given the national rally of Marine Le Pen has already said they will support the no-confidence motion from the far left. So it does look like Michel Barnier could be the shortest-lived prime minister of the Fifth Republic.
So take us what happens in 4 hours' time after that debate, after that vote. What's next, Caroline?
This is what's next. President Macron already preparing for what's happening after Michel Barnier, because technically he's going to have to name a new prime minister very quickly. Last time he took 2 months to choose a prime minister after his party lost the snap elections in July. This time, at least his entourage is saying he's going to have to act much quicker to reassure the markets, to try and find a compromise, to try and ensure that we can actually find some kind of stability in this country. So some people are actually talking about the next 24 hours for a new prime minister if there is a collapse today. Obviously, some names are already circulating, like we had last time of the summer, you know, Bernard Cazeneuve, the former socialist prime minister. In fact, the socialists may hold the key. I was just bumping into the former president, François Hollande, last hour, and he didn't want to talk to Bloomberg quite yet, but, you know, there might be a center-left coalition. That might be the key for the next government.
It's who knows who comes back from the political backwaters. What does Marine Le Pen get here? She, in some ways, is partly responsible and driving this political chaos. How do the people of France look at her at the moment? Does she gain in this game?
It's actually very interesting because a lot of her electorate are actually wondering what's going on. Is this rational? Is this rational to have so much instability, at least in the short term? As you know, she is facing a potential ban from running for office for the next 5 years in this trial on embezzlement on EU public funds. She's going to have the verdict on that at the end of March. So a lot of people are saying she's not exactly behaving rationally, but she does have to answer to some of the demands from her electorate, including, of course, pensioners. And she did ask Michel Barnier repeatedly to increase pensions as soon as January, and the government didn't want to compromise on that.
Caroline, we really appreciate your time this morning. That is Bloomberg's Caroline Conan outside the National Assembly in Paris. Meanwhile, here in the U.S., President-elect Trump changing some of his cabinet picks potentially. The Wall Street Journal reporting that he's weighing Florida Governor Ron DeSantis to run the Pentagon. That would replace his previous pick, a controversial one, Pete Hegseth. Joining us now from Washington is Courtney Rosen of Bloomberg Government. Courtney, does this show that potentially Trump doesn't have the blank check to put whoever he wants into his cabinet, that there are some moderating forces, especially in the form of the Senate?
It's certainly a signal that that is accurate. The Republican Party will have a majority in the Senate beginning next year. They'll have 53 seats out of 100. So they have some room for wiggle, right? Where a couple senators may not agree with a nominee, but they can still move that person forward if Democrats, none of them want to go for that person. But this is a test. We saw that with Matt Gaetz, the president-elect's nominee for Attorney General a couple weeks ago. A test of whether the Senate will push back or the Senate will go with what the president-elect wants in 2025.
Well, people are withdrawing, but, people are being pushed aside, one or two, we know that. But talk to us about the DEA pick. He's stepping aside himself, Chad Chronister. He has decided to withdraw.
He was picked to lead the Drug Enforcement Administration, and they deal with a lot of geopolitical issues. He has a local background in local law enforcement in Hillsborough County, Florida, which is in the Tampa area. He was in charge during March 2020, if you remember, when cases were increasing rapidly in the United States, and leaders were asking people to stay home, to not gather together. And he enforced that kind of public health restriction at a church, where he arrested someone for holding church services in March of 2020, big gathering of people that wasn't good for health at the time in terms of containing COVID. And so he was criticized for that on the far right. He didn't, when he withdrew his nomination, outright say that that was the reason, but that criticism was definitely existing in the last couple of days.
Courtney, thank you very much. Courtney Rosen on the very latest picks for Cabinet. Salesforce is surging this morning, Danny. We've got some pretty big moves, and this is about a change in policy and direction, isn't it?
Yeah, I mean, nearly 14%, and the change might be just the hype around AI itself for Salesforce. Joining us more on the story is Bloomberg's Tom McKenzie. Tom, what is behind this boost?
Well, you're right. Look, there's been a change in terms of the direction that's been coming through for the last few months for Salesforce in terms of the job cuts, the efficiencies. They were under pressure from some of their investors to do that, Mark Benioff and team. They invested, though, in Agentforce, so an AI agent that they're pushing out to their customers, and it seems to be paying off. To your point, the sales were a beat, the margins were a beat, the outlook as well for the current quarter coming in and looking favorable. Interestingly, Mark Benioff saying that it's not just the numbers of the current quarter, most recent quarter, that excite him. He said they were fantastic numbers. He says he's more excited about the prospects of this technology, these AI agents, as they're characterized, at least by Salesforce. They've hired an additional 1,000 people to try and sell them to their customers. And he thinks there's real upside, as does, by the way, the analysts from JP Morgan, who say that the forward guidance in terms of revenues and margins, those could be raised going forward on the back of what they're seeing at Salesforce.
Tom, it's interesting when you look at some of the calls. You've got Evercore and an outperform, Barclays with an overweight with a price target of $415. We just had a conversation with the OECD, the chief economist there, and he's talking about a real lift in efficiency from AI. This is about the ability to develop the product and sell it on a higher margin in that area, isn't it?
It absolutely is. It's about including those additional products for their existing customers and building out a customer base beyond the CRM, for which, of course, they are famous at Salesforce. They think they can expand into parts of this market that they have yet to touch. That's why when Mark Benioff talks about the future, he leans on this technology that they are investing in. And again, they are not seeing the full impact of this yet. It's the forward look on the potential for this that could be the real benefit for Salesforce going forward. Interestingly, on the AI piece as well, to sustain all of this, you need to have the energy there, and that's where the story around Meta comes into play. They have told developers to draw up proposals to have between 1 and 4 gigawatts of nuclear power ready for the 2030s. You cannot have Salesforce building their AI agents if you don't have the data centers training these models and if you don't have the data centers supported by energy. We know the energy piece is crucial. Mark Zuckerberg has spoken about this earlier in this year, saying that is the major headwind for the growth of AI going forward. Now he's putting his money where his mouth is on this front and looking to get potentially up to 4 gigawatts. 1 gigawatt, by the way, can provide power to about 750,000 homes, or one mansion. Alphabet, Amazon, they're also doing this. Microsoft with Pennsylvania, and they're looking to invest. They've already done a deal in terms of reviving that nuclear reactor on 3 Mile Island in Pennsylvania. So big tech, the hyperscalers, they are trying to get the nuclear piece at play so they can have that energy surety in the years ahead.
Does that imply Manus's mansion is the size of like a city?
Can I just say the square footage in your average New York apartment is very, very different. So there's Mac mansions at home in Ireland, Tom, but I'm not in a Mac mansion, that's for sure.
You know what, Manus? This is what it is. An apartment in New York City is the same as a mansion in Ireland. Hey, Tom, thank you so much for your time this morning. That is Tom McKenzie there, Manus.
Yeah, let's just check in on these markets, Danny. I mean, we're knocking out 55 records in a row. That was yesterday. Can we bring that home today? $11 trillion in market valuation has been added so far in 2024. The 10-year yield ticks higher by 2 basis points this morning. We'll talk through what to watch on the slate in just a moment.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
It's your Bloomberg Brief. Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading day on this Wednesday. We're going to have more earnings. Dollar Tree, Foot Locker, Campbell Soup, all of them report before the bell. Then we're going to hear from the big events. Fed Chair Jay Powell will be speaking 1:45 p.m. Eastern at a New York Times event. We're also going to hear from Christine Lagarde today. Plus, the Fed Beige Book, Manus, that will come out at 2 p.m. Those anecdotal sort of stories taking more importance for the Fed as of late.
Well, let's see whether the pace of Powell has changed and if he's in a bit more of a hurry from the data from the economy. Some stocks to watch. Dollar Tree, earnings before the bell. Bloomberg Intelligence expects a softer discretionary spend pressuring the performance. You got Oracle, earnings after the market closes, supply issues in focus, and Merck raised to a buy at HSBC. The analyst there noting that the current valuation leaves a significant margin of safety in the valuation. So we're up 1%. Danny.
Meanwhile, Manus, the dollar keeps strengthening against more currencies. And what we're starting to discover is it's not necessarily just about pro-growth policies. It's also turning into one where political disaccord abroad is bringing money back into the U.S. and bringing money back into the dollar.
And I like what Mark McCormick had to say at TD, which is, it's the burden of proof on the euro. Do you buy euro assets? Have you got enough conviction to buy euro assets? Because that's the only thing that's probably going to turn or pivot the euro-dollar trade.
Yeah, I don't know what gives people that conviction at this point. Anyway.
We give them hope.
Give them hope. That's it for your brief surveillance. We'll take it from here.
name is Konstantin Stefana. I am the owner, I have family office and the company called Company I Limited. I also have a live streaming channel for startups. It's SG Trader, so we let startups to pitch investment community on our channel. I give them 3-minute pitch, we publish their video on our channel, and everybody who is interested, please welcome to send me your video, and I will roll for almost a month your video for all financial community. The channel is live, it's streaming live 5 days a week, from morning to night.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
leverage somewhat more reasonably.
Wei, it's good to see you. Thanks for joining us here in New York City. Thank you. Thank you very much. Wei Lee there of BlackRock with a big bias towards the United States. In the second hour of Bloomberg Surveillance, we'll catch up with Alicia Levine of BNY Wealth, John Lieber of Eurasia Group, Norman Rule of CSIS, and Zach Griffiths of Credit Sites. All of that and a whole lot more just around the corner, with equity futures up another 1/3 of 1%.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
is flying by quickly, and that's the way we like it. The second hour of Bloomberg Surveillance starts right now with stocks at all-time highs. Hello, Wednesday. Equity futures up by another 1/3% on the S&P 500. On the Nasdaq 100, we're shaping up as follows. On the Nasdaq, higher by 0.6%. The rally continues at the mercy of the data and some Fed speak a little bit later. You hear from Chairman Powell at 1:40 Eastern Time. Some economic data, the ADP employment report, just another appetizer before the big one on Friday.
Yeah, and so far so good, at least when it comes to economic surprises in the United States. You do see the Citi U.S. Economic Surprise Index inflect higher once again to near the highest levels going back to April after yesterday's JOLTS data. Key question, how much strength is too much strength? How much do people start to think about maybe pausing or having the Fed not cut as much? The Fed seems to be torpedoing that talk and saying, look, we're still a far place from neutral. We need to keep lowering rates. It's just the pace of how quickly they will continue to go down.
It's interesting how many times we've heard that, and from a lot of different people. Chicago, Goolsby, San Francisco, Daly, heard it from Governor Waller as well. They really believe there's a long way to go to get back to neutral.
There is this belief that as inflation comes down, so it's not that prices are coming down, but that the pace of the rises of increased prices has slowed, that essentially these rates are getting more restrictive, and they have their eye on something that Torsten Slok actually just put a note out on, which is that the lowest income consumers are the ones getting hit hardest by rates remaining at these levels. And if you continue on that level, then it becomes a very difficult and politically fraught type of scenario to keep rates at this level, even if Wall Street is celebrating and popping the corks.
Looking ahead to payrolls Friday, the estimate in our survey moving around. It's about 218 at the moment. That's the median estimate in our survey for payrolls Friday on a headline number. For Wall Street, you'll hear a lot of one word: sequencing. The focus on Washington, D.C. is on the sequencing of policy. And I think we've got a little bit of an idea about that in the last 24 hours, where the Senate Majority Leader, Mr. Thude, would like to see things go.
Yeah, first 30 days, they want to focus on immigration. Part of that can also be because they are going to extend the spending until March. So get some immigration deal done in the first 30 days. That was part of one of the top issues. Voters came out and gave what the Republicans feel like a mandate. And then maybe when the spending issue later down the year becomes more into the forefront, when the continuing resolution ends in March, then they start talking about tax cuts. But where did the tariffs come in? That's the question.
Well, that's up to the president, and he's not going to wait around. In fact, he's already started, hasn't he? And I wonder how much conflict there is between the timeline on Capitol Hill and the timeline in Mar-a-Lago.
Well, and the timeline in markets, which is that tariffs, what tariffs? They're not going to happen at all. And that's sort of this question of at what point is this market pricing in a perfect sequencing, to Anne-Marie's point, and a sort of dialing down of some of the promised campaign speeches to lead to some kind of policy that allows this rally and those good feelings to continue. I mean, this is an actual real question for people as everyone piles into American exceptionalism.
It's a lot of good feelings, that's for sure. We're up another 1/3% on the S&P 500. Coming up this hour, we'll catch up with Alicia Levine of BNY as the S&P 500 notches another all-time high. John Lieber of Eurasia Group as Capitol Hill looks to set up Trump's agenda, and Norman Rule of CSIS as Israel carries out new strikes in Lebanon. We begin this hour with stocks higher, the S&P 500 notching its 55th record close. Investors looking ahead to more jobs data and some remarks from Fed Chair Jay Powell. Alicia Levine of BNY seeing more room for equities to run. We think the market mounts up into year-end with a market-friendly economics team and an incoming administration with an eye on risk assets. A 2025 year-end price target is 6,600. Alicia joins us now for more. Alicia, good morning.
Good morning.
Thank you for sharing your outlook off the top of the show with us, the top of the hour at least. It's good to see you.
Thank you. You'll be launched this morning.
This hour, I believe. 6,600 is the price target. This is a group of around 65, 66, 67. There's a lot of you. Does that make you nervous?
I think consensus makes me nervous, but it doesn't necessarily mean that we're wrong. So what we see here is the Fed cutting into a soft landing. I mean, that's really the big fundamental picture here. What gets us another 10% higher? The Fed's cutting into a soft landing. Historically, when that happens, 12 months later, the market's up about 16%. So we're into the structural time where equities will do quite well, coming in with a market-friendly administration, perhaps more volatile. And so we just think that the market can move higher here. And so with that setup, you'll have more vol, because of the idiosyncratic nature of policy that you've been talking about for the last 3 weeks. So I remember those days from 2017 and 2018.
We all do.
So we're going to get some vol. I don't think it's going to be a straight line the way it was this year, but that's entirely healthy and normal. We're bullish on America, we're bullish on the market, and we think you're set up for another double-digit return for next year.
When you say market-friendly, what do you mean? Vibes or policy? And if it's policy, what policies?
So first of all, it's vibes. I think it's unmistakable. You know, we manage wealth for large clients who have businesses in the real economy. And I did a lot of travel after the election. And I can tell you the client base with businesses, they're very optimistic and very bullish, in part because the certainty is back. The uncertainty of the 50-50, not knowing where policy was going, puts a pall on economic activity. So hiring's picking up, decisions are being made. That's great. Clearly, the extension of tax cuts is very good. The fact that the corporate tax rate will not be going higher is also very good. So that creates a market-friendly environment. Of course, the deregulation. So all that's good. What's not great is perhaps the tariffs, again, idiosyncratic, and where do they get put? I think it's safe to say the China tariffs get put on because the president can do that as part of a national security at 230. The administration can do that. If it's not national security, not clear the administration alone can do that. And so that'll create your volatility around these issues. So less market friendly, but also opportunities to buy.
You said a lot of this was predicated on the idea of a Fed cutting into a soft landing at a time where you're going around talking to different business leaders who are incredibly optimistic, who are ramping up spending, who are ramping up hiring. At what point are we talking about maybe something that looks a little bit not like a soft landing, but no landing, or something that's a reacceleration?
So I think you could say fairly that this year was kind of a no landing. You know, we're coming in at 2.5% growth, maybe higher, to the extent that economists see trend growth